time we are set to have at the BusinessDay Fintech Summit 2026. But before we begin today's event, I always like to pose questions to attendees. Now, we are here for the Fintech Summit. Am I correct? We are here for the Fintech Summit. Am I correct? Okay. Now, when you hear Fintech, what's the first thing that comes to mind? There are no right answers and there are no wrong answers for this particular question. I just want to see if our attendees are really prepared and are set for what we are here to discuss today. So can we have a microphone? Who wants to try? When you hear Fintech, what comes to mind? Who's going to help me with microphones? Yes. Who wants to try? Fintech. I'm going to call names, so, because during the tea break, I met a lot of amazing individuals. So who wants to try? We are still shy. Are we still shy? We are still shy. Okay, so before my question, here's what we are going to do. When I called for the tea break, I noticed that some gentlemen and some nice ladies were still sitting, so they didn't want to come outside and participate in the tea break. So we are just going to have a brief network session right now before we begin the event. So for 2 minutes, the individuals on this part of the hall would come to this part, and the individuals here will go to this part, and you just try to network with each other. So this is just to down the tension, because someone gets it, everyone is still shy. So please, chop, DJ, can you give us something like, in 2 minutes, I want to see people exchange contact. I want to see people say hi to each other. I want to see people compliment each other. Tell them, you are looking so fintechy. You are looking so OPE. You look like you used OPE before you came here today. So please do that. Thank you very much. I'm not seeing anybody moving. No, that's not what I said. You have to move from that aisle to this aisle, please. Thank you. I can see someone already standing up. Say hi to someone. Compliment their outfit. Ask them what they do. What are they building? Are they banking the unbanked? Ask them what's the name of their fintech app or their fintech solution. Exactly, that's more like it. Don't be scared, don't be shy. Nice one, Chidima. Very, very good, yes. Don't be scared of some of our speakers. This is the best time to get to meet them. Because after their sessions, they might want to catch up with 1 or 2 things in town. So please. Exactly, that's more like it. The lady in red. Yes, you. Yes, you. One more minute, just 1 more minute, and then we'll kickstart today's event. I can see Dr. Innocent is waiting for someone to come and say hi to him. Our keynote speaker is also around. He's also waiting for you to come and say hi to him. So please, make your way to the front. 30 seconds more. So 20 seconds more. Ten seconds more, and we are set. Thank you all for engaging in this networking session. You may now please return back to your seats. I can tell that tensions have been completely doused. Yes, you may now return back to your seats. Thank you. Did anybody come, Mr. Ibukun? Did anybody come say hi to you? You don't know that OP is in the building. You use OP, you don't know OP is in the building. Nah, you're wrong. All right. That's okay, that's okay. That's okay. Settle down, please. Settle down. Settle down. Okay, anybody that doesn't settle down, I'll give a person the microphone. You need co-MC for the day. All right, ladies and gentlemen, you are once again welcome to the Business Day Fintech Summit 2026. It's an exciting time. We are set to have here discussing fintech, discussing financial technology, and engaging in insightful conversations that will expand the frontiers of the African, not just Nigeria, the African fintech industry. You're all welcome. Please, ladies and gentlemen, a round of applause for yourselves. Round of applause for yourselves, ladies and gentlemen. I wish I could come down and tell you that you are all looking amazing, you're all looking pleasant, and that's why we had the networking session where you told each other that. So thank you very much for being in attendance to today's event. We are set to have insightful conversations, just like I said earlier, 2 industry presentations, 2 fireside chats, 2 panel sessions. All in all, what we want to do today is all in the theme for today, the next financial frontier, intelligence, infrastructure, and inclusion in Africa's digital money economy. Now, I pose the question, and I would still like to ask that question one more time. When you hear fintech, what comes to mind? Who wants to try now? Who wants to try? When you hear fintech, what comes to mind? I need answers. I will still come to you. Yes. Can someone give her a microphone? We want the conversations today to be very, very engaging. So when you hear fintech, what comes to mind? I would really like to hear from an attendee. Okay, Ginger, yes. Can you help me? Yes, thank you. Fintech, fintech, fintech. Okay. Okay, yes. What comes to mind?
Okay, thank you. Sending money fast.
Sending money fast. Is she correct? Is she correct? Who wants to try? Who wants to add to that?
I think fintech simply means using technology to deliver financial service.
All right. Okay. Who wants to add? Final attendee. Someone wants to try? I can see hands over there.
Financial technology. It enables you to understand the idea of getting smooth and ensuring fast transfers across borders, and worldwide as a whole.
Are you one of the speakers today?
No, I'm not.
Thank you very much. Thank you very much. Okay, who else wants to try? Yes, one more. When I gave you the opportunity, you were shy. Please.
Good morning.
Okay.
So I would say automating financial services.
Automating.
Combining finance with technology.
All right. A round of applause for all our beautiful answers this morning. Please make that better. A round of applause. A round of applause, please. Thank you. Just like I said, there are no right answers. There are no correct answers. All of them are correct. All of them are right. Ladies and gentlemen, welcome once more to the Business Day Fintech Summit, where we are going to be discussing everything fintech today, the infrastructure, the structure, the architecture, everything that makes up the ever-evolving $10 billion worth of the Nigerian fintech industry. My name is Nini Edime. A lot of people like to call me the social lawyer because I'm a fintech lawyer and I'm an entertainment lawyer also. Welcome once more to the Business Day Fintech Summit. Now, to kickstart today's event, we'll be hearing from the publisher of Business Day, Mr. Frank Aigbogun. He's ably represented today by the Deputy Editor-in-Chief, Dr. Innocent Una. Ladies and gentlemen, please put your hands together for the Deputy Editor-in-Chief of Business Day Media, Dr. Innocent Una.
Thank you very much, Nimi, lawyer, fintech enthusiast also. Ladies and gentlemen, good morning. My name, once again, is Dr. Innocent Una. I'm the Deputy Editor-in-Chief of Business Day Media. Distinguished guests, esteemed partners, industry leaders, and innovators, it is my pleasure to welcome you to the Business Day Fintech Summit 2026. We gather here at a moment of consequence. Not long ago, the central question in Nigeria's financial system was access. who is banked and who is not. Today, that question has evolved. Access is no longer enough. The real question now is, what kind of financial system are we building, and who does it truly serve? We are entering a new phase, one defined not just by digital payments, but by intelligence. Artificial intelligence is shaping credit decisions. Data is defining risk. Platforms are embedding finance into everyday life. And infrastructure, often invisible, often underappreciated, is becoming the backbone upon which trust is built. But progress brings complexity. As innovation accelerates, so too must regulation. As systems scale, so too must resilience. And as access expands, so too must inclusion, ensuring that growth does not leave behind the very people it promises to serve. This is why this summit matters. At Business Day, we believe that markets function best when information is clear, dialogue is honest, and stakeholders are aligned. For over 2 decades, we have created platforms that bring together those who shape policy, those who deploy capital, and those who build the future. Today is a continuation of that mission. We are proud to convene this summit alongside a distinguished group of institutions whose leadership and market presence reflect the direction in which the industry is moving. Our headline sponsor, OPay, stands at the forefront of financial access and digital payments at scale. Alongside them, we are supported by leading institutions including First City Monument Bank, Visa West Africa, Teamapt Limited, Oxygen X Finance, and Platnova Technologies Limited. We also acknowledge the critical role of our ecosystem partners, stakeholders in the Blockchain Technology Association of Nigeria, CYBAN, and Committee of E-Business Industry Heads, whose work in shaping standards, advocacy, and coordination continues to strengthen Nigeria's financial services landscape. These are not merely sponsors and partners in the traditional sense. They are institutions actively participating in, and in many cases, defining the architecture of Nigeria's digital financial future through investments, innovation, and institutional leadership. Over the course of this summit, I encourage you to do more than listen, challenge assumptions, interrogate ideas, build partnerships. The future of finance in Nigeria will not be determined by any single institution, but by the collective choices we make on technology, on regulation, and on inclusion, and on trust. The next financial frontier is not ahead of us, it is already here. The question is whether we are prepared to lead it. Thank you and welcome.
You can make that better for my publisher. Thank you so much, Dr. Innocent. Please convey our gratitude to the publisher of Business Day Media. Just tell him thank you for birthing and also following up with the vision that is Business Day. A round of applause one more time for Business Day Media. Earlier on, I said that the Nigerian fintech industry is worth how much? Who can remember? $10 billion. Yes, you are following. Last year alone, 2025, the combined fintech industry in Nigeria was able to facilitate 2 trillion, not naira, not pesos, $2 trillion worth of transactions just in Nigeria alone. And our next speaker, who is going to be delivering the keynote address based on the theme for today, the next financial frontier, intelligence, infrastructure, and inclusion in Africa's digital money economy, is no other person than Dr. Stanley Jacob. Please put your hands together for him. Dr. Stanley Jacob is the Group Chief Innovation and Technology Officer at Meristem Securities Group. He's the President of the FinTech Association of Nigeria and the Vice President, West Africa, for the African FinTech Network. For the next 15 minutes, a keynote address that's just like a masterclass will be delivered on this very stage at the Business Day Fintech Summit 2026. Ladies and gentlemen, one more time, Dr. Stanley Jacob.
Thank you, sir. Good morning, everyone. Good morning. Masterclass without certificate. Thank you. So I want to welcome everyone, the distinguished publisher, ably represented, and our speakers here present. I've seen a couple of industry leaders seated here this morning. Our fellow fintech leaders, innovators, investors, and thought partners. Good morning. I greet you all. This morning, I am here to deliver the keynote on access to intelligence, rewiring Nigeria's financial system for scale, trust, and global relevance. You know, I want to begin not with data, even though there will be data, not with prediction, even though there will be prediction too, but I would like to start with a confession. You know, over a decade ago, maybe 10, 15 years ago, when we gather in rooms like this, one thing we talk about and we argue about and we try to fix, we almost sometimes fight over it from different thoughts and opinions, was how do we give Nigerians a bank account? Give them access and let them in. And from then, we've had different programs. The financial inclusion strategy, the cashless policy, and all that, you can name it. What we're trying to do was to give bank accounts. Today, even though some of us might say we have not gotten to the milestone, we have largely won that argument. More than half of Nigerians, adults, some form of financial access is in their hands right now. We have over 500 active fintechs across different ecosystems. Fintech NGR as an association itself has over 640 institutions. And Africa Fintech Network across 48 countries as member institutions. So we're doing well, not just as Nigeria, but as a continent. Today we have a USSD infrastructure that reaches our grandmother and mothers in the rural markets, from Kogi, Kano, to Sokoto, down to Ekiti and Kwara. We can access people. We've come up with different initiatives, from e-Naira to open banking framework, the regulatory sandbox, whether from CBN, from SEC. All these things, they've incubated real innovation. We have seen companies that were born in Lagos that are now clearing payments, processing payments for businesses and for consumers across 30, 40 countries, not just in Africa, but from America to Middle East. But I'm laying this background to let us know that we have won the access war. We didn't clap. Yes, we've declared victory over access, right? We won the access war. But what I'm here to tell you is that we are in the danger of losing the intelligence piece. And I'll start off by saying, if you look at the access era, what is it that we really built, and why was it never enough for us today? I have worked across different, not just in Nigeria, at least I've covered no less than 35 countries in active work over decades. And one thing I've seen is that I have watched access spread. Sometimes access spread slowly, sometimes in sudden launches across the continent. And what I saw consistently was that if you have access without intelligence, you're on a road with no destination. Access says, here is a wallet, here is a bank account. Intelligence asks, what does this person need it for? Access says, you are now banked, what we call included in Nigeria. Intelligence will ask, are you really better off? Access was the infrastructure of inclusion. Intelligence is the infrastructure of transformation. And when I was reading that, one thing came to mind, and it was very clear that the next financial frontier is not about who has a financial product. It is about whether that product understands the user or the customer, as the case may be. Now, when we move on to why intelligence is important, they've asked me to talk about rewiring, even though I'm not an electrician. But I will talk about the 3 rewiring mandates. You know, some of us will argue that rewiring Nigeria's financial system for scale, trust, and global relevance requires us to work simultaneously on 3 critical circuits. Think of them as 3 wires that must be connected before the system can carry full current. Wire 1, the infrastructure of intelligence. The first wire is infrastructure, but not the infrastructure we have been building. All this while, we have been building infrastructure for connectivity. We now need infrastructure for cognition, for intelligence. What is the difference? Connectivity infrastructure moves money. Intelligence or cognitive infrastructure understands money. Who moved it? Why? What risks has it carried? And what opportunity can we gain from that movement of money? And most importantly, what's the next optimal financial action should be for the person that is moving that money? Nigeria processes payments now in quadrillions. Largest ever. No country in Africa has been able to match that from the last NIPS report. But what do we know about these transactions at the aggregate, at the segment level, or at the individual level? Have we really been able to unpack them? What does the pattern of a market woman's mobile money usage or her bank account with OPay, with PalmPay, what does it really tell us about our creditworthiness? What does a spike in USSD transfer from a particular local government tell us about their activities, day-to-day activities? What does the velocity of P2P transfers in a community tell us about the presence or absence of formal financial services? The answer in most cases is very little. We have some, because we've seen institutions like OPay adopt AI in very large scale. But you see, as a nation, the answer is little, because our infrastructure was designed to move money and not to learn from it. This must change. We need investments in data infrastructure, data lakes, shared data utilities, AI processing capability that turns every transaction, whether you're doing them as an individual or as a business, those transaction behavior are turned into insights. Every account becomes a profile, and a profile that can better determine financial outcome for the account holder. You know, at Meristem, where I serve as the Group Chief Innovation and Technology Officer, we're building exactly this kind of intelligence layer into our core systems. We're embedding AI into the architecture of our wealth management and retail advisory, our institutional service, as a core to our customer engagement, interaction, and not just as a product feature. Nigeria needs this at scale. Our regulators, from CBN to SEC to NICOM to PENCOM, we need to create data infrastructure standards that allows industry-wide intelligence to build without compromising privacy. Our telcos, our fintechs, we need to stop hoarding data as a competitive asset and start treating aggregated, anonymized intelligence as a national asset. We believe most of this will be addressed when we launch the open banking, hopefully soon. There is that thing we always say, that data is the new crude oil. But the problem here is that, unlike crude oil, where we have to sell to get money, data only becomes more valuable and more useful. It only brings you money when it is shared. The second wire is trust. And I want to say that trust is our biggest problem in Nigeria, and we have not dealt with it honestly. We talk about financial inclusion. We talk about growing our user base. But the single biggest barrier to deep financial engagement in Nigeria is not access. It is not even product design. It is the fact that millions of Nigerians, including educated, urban, digitally capable Nigerians, they have had their fingers burnt at one time or the other. You know, I was speaking to my senior colleague, Ogatunde, earlier. I said, what are we going to do about the data breaches every day now? You know, we've now moved from hacking people's accounts to now hacking institutions and all the data breaches. So right now in Nigeria, whether you're an individual or you're an institution, something must have touched you, you know, in one way or the other. You must have experienced fraud. You must have experienced failed transaction. You must have experienced customer service that disappeared when you needed it most. And you must have experienced products that promised things that they never delivered. The erosion of trust is a systemic risk. It is not a communication problem to be solved with a marketing campaign. It is an architectural problem. Trust architecture has three components. The first is security. How do we have genuine multi-layer AI-powered security that does not dictate fraud after it has happened, but it dictates it in real time? And as president of the Fintech Association of Nigeria, also covering the Africa Fintech Network in West Africa, I have advocated consistently for industry-wide fraud intelligence. I want us to look into data, unpack, and share. We cannot treat fraud data as proprietary when fraud is our common enemy. The other component is transparency. In an intelligent financial system, the customer should always know, where is my money? Why did that transaction fail? Why was my credit declined? And what can I do about it? And I want to commend some of our new digital banks today. And we've seen things where you want to send money now, it tells you that this bank is not available. We didn't used to know that before, you know. When you send money, you follow it up with fasting and prayer. You know, but now we can know why your credit is declined, what your limit is. We are clear now that opacity destroys trust. And if we have AIs that can explain to us things, it is commercial importance, of commercial importance, not just to us, but to the customer. The third component is accountability. When things go wrong, and in any complex system, things will go wrong, there must be clear lines of responsibility and fast, fair resolution. The recourse architecture of our ecosystem is still far too slow, far too opaque. This must be fixed, not just by the regulator alone, but by all of us, and as a matter of urgency. The truth is this: you cannot scale what people do not trust, and you cannot earn trust without earning it. One interaction at a time. Now, as I wrap up, I'll talk about the third wire, since Business Day made me an electrician today. The third wire is perhaps the most ambitious and the most urgent. Nigeria is not building a domestic financial system. We are, whether we acknowledge it or not, building a node in the global financial network. And the question is whether we will be a node that merely receives and transmits, or the one that originates, prices, and leads. Embedded finance is the lens through which we can see this clearly. The next wave of financial services will not be delivered by banks or fintechs operating as standalone entities. They will be delivered through ecosystems, agricultural platforms, logistic networks, e-commerce marketplaces, healthcare providers, educational institutions, and all that. All those institutions that can bring financial services together and embed them into their point of value creation. Nigeria has the customer base. We have the developer talents, even though they are running away. And we have the entrepreneurial energy to be the embedded finance capital of Africa. But we need the right frameworks that are built for this reality. Not frameworks that assume a sharp line between financial and non-financial entities, because that line is dissolving and dissolving very fast. We also need to get serious about cross-border. The Africa Continental Free Trade Agreement and the Free Trade Area is an infrastructure mandate that it needs to do better. If goods and services are to flow freely across African border, then money must flow freely too. Nigeria cannot position itself as Africa's financial capital if a fintech founder has to navigate 47 different regulatory frameworks. And that is why at the Africa Fintech Network, we have cemented what we call the fintech license passporting. And we are working with AfriExim and other institutions on that. Today, we have seen Rwanda and Ghana signed off the fintech license passporting. Just last month when we were in Kigali, Rwanda and Kenya signed off another one. And what it means is that if you are a founder in Ghana and you want to set up in Rwanda, you don't need to start going through the licensing process again. So we're addressing these things, and I am proud that Fintech Association of Nigeria has been on this table, and Africa Fintech Network is leading it. And of course, working with our counterparts across the continent to build shared standards, mutual recognition frameworks, and a coordinated voice before regulators and global institutions. Now, as I wrap up, it will not be complete if we don't hold ourselves accountable. And the regulators also will continue to work with them because they have the power to accelerate or to frustrate. And that is with the most respect, not as a critic, but as someone who has been working very closely with the regulator for a very long time. We need adaptive regulation that is built to learn and iterate as technology learns and iterates. I'll close with an image. When you rewire a building and you do not tear down the structure, you keep the walls, the floors, the foundation, but you replace what is running through them. So for you to rewire a building, you don't need to bring the building down. You can actually do it with the building still standing. Old wiring can barely carry a load, especially when they are bad. You will get sparks when they touch, and you will get darkness when it burns. But with new wiring, we are capable of carrying 10 times the current with safety, with precision, and with intelligence. Nigeria's financial system is that building. We have built it. We are proud of it. We should be proud of it. But the wiring, the systems, the assumption, the model, the culture must be replaced. Not because what we built was wrong, but because what we are being asked to carry now is far heavier, far more complex, and far more consequential than anything the old wiring was designed for. I'll wrap up by saying that we should turn on this light and let us light up the next generation. Thank you very much for listening to me, and I wish you a successful day.
Please, another round of applause for Dr. Stanley Jacob. Make that better until he gets to his seat. Thank you so much, sir. He said it was a keynote address, but it was actually a masterclass. When someone is christened with doctor, I'm always excited to, hear from their well of knowledge. And you could see that he took us from the past, the present, and he also told us what the future of fintech should look like. And I like when he talked about trust. And he also made mention of what we can do better in the fintech industry to gain trust of the customers, consumers, and clients. And this touched on what our headline sponsor does. I'm sure you all know our headline sponsor for today's event is OPay. Now, most times when you want to transfer with the OPay app, if you want to, for someone like me now that doesn't always have up to 100,000 in my account, if I want to transfer 50,000, you say large transfer detected. If I want to transfer at night, it will log me out. I'm like, what? But sometimes when you want to make transfers to some banks, they'll tell you this bank is at 70%, this bank is at 60%, this bank is at 50%. Please, a round of applause for OPay. Thank you so much, OPay, for making our lives easier. How many of you use OPay every day? Exactly. When I was coming here, I took an Uber. Everywhere you go, OPay. You're trying to make a payment, OPay. Thank you so much, OPay. And thank you so much, Dr. Stanley Jacob, for that wonderful masterclass. I had a lot of notes. My notes are actually filled. I'm not going to lie about that. Now, there's going to be a slight alteration to the order of events. If you have this brochure with you, you'd see that, just one moment, please. Okay. Still, there's going to be a slight alteration in the order of events. But before we call on our next speaker for another industry presentation, I want to go into the crowd right now, and I just want to engage and ask, what was your biggest takeaway from Dr. Stanley's keynote address? No right, no wrong, no incorrect answers. You are all correct. So please, who wants to try? Thank you very much. Who's going to help me with the microphone? Ginger. You are really ginger today. Thank you. All right. So I can see a hand over there. And then this lady with the brightest smile here. Yes. If you like, turn your face. I can see you, and you are definitely going to answer. All right. Yes.
Okay. Thank you, Dr. Stanley.
Yes, Dr. Stanley.
Yeah.
Good.
I don't know. Can you hear me now?
Yes, I can. Loud and clear.
Okay. Yeah, I think one of the things is the fact that AI, that's artificial intelligence, will significantly impact movements of funds in future in terms of knowing what opportunities are there and how we can drive financial inclusion more. So I think I picked that, and as a finance person, I have to key myself more into that. Thanks.
All right. A round of applause for him, please. A round of applause now. It's still early. Thank you. Who else wants to try? So Ginger, once she does her bits, there's a lady in front with a nice hairdo, and then you pass the microphone to her. Yes. Thank you.
My company.
Yes. What was your biggest takeaway from the keynote address?
Do I have to stand up, please?
No, you can sit, please.
Thank you.
Just introduce yourself. And
My name is Adebimpe Adeni. I am the lead consultant at BB Helps Consult. We are a student recruitment consultancy firm. And what I picked is accountability. He said you can, whatever it is you do, is either you frustrate or you accelerate. Okay. And that is what I think the fintech companies are doing right now, and separates them from the digital banking that we use every day. So whatever it is we are doing, you remind yourself that whatever it is you decide to set yourself to do, it has to help, it has to promote, it has to empower even the market women. So at every given point and segment, everyone has to enjoy the capacity you decide to imbibe into the economic system. Thank you.
all right. A round of applause for her. Thank you so much. Stop there, yes. Okay, that will be the last bit we'll get for this session. Thank you. In just 1 minute, what was your biggest takeaway from Dr. Stanley's keynote address?
Thank you. So my name is Pamela. I'm a senior associate in Udo Dumambelo Sage. And my core practice area is banking and finance and fintech. I think my biggest takeaway is something all belonging to say without saying. Intelligence. It's no longer enough that we have access to bank accounts. Our financial services providers should be able to, we should have access to our data and should be able to decide how our data can be used to provide more tailored financial services to us. I don't just want to keep my money anymore. What can you tell me about my spending pattern? What can you use the information on my transactions to do for me? What kind of services can you provide me with the intelligence you have? We need to transcend to that level in our financial services.
Thank you. A round of applause for her. Thank you so much. I also remember when Dr. Stanley talked about data and how it shouldn't just be a statistics first, but how this data can even improve lending services for some of these fintechs. Thank you so much, Dr. Stanley, for that masterclass one more time. Moving very quickly, for the next 15 minutes, we're going to be having an industry presentation from the Chairman Committee of E-Business Industry Head, CB, Mr. Ajibade Laolu Adewale. Please put your hands together. He is going to be represented today by Abidemi Asumo. Please make your applause better. Thank you so much, man.
Thank you. You know, when he didn't say who is going to be represented, and as I was coming in, I saw that looking at the Mr., and this is a she. All right, thank you once again. My name is Abidemi Asumo. I'm the Vice Chairman of the Committee of E-Business Industry Heads, and I'm here, just as he said, representing the chairman committee of e-business industry heads in person of Mr. Jibade Olaolu Adewale, who is unavoidably absent here today. He would have loved to be here, but due to unforeseen circumstances, I had to come around and represent him. He has, however, instructed me to say that, Bidemi, it's not your thing, no, it's, he's the one. And he had prepared a speech specially for this occasion. And he wants me to deliver that speech. And so just take it as the traditional way. So I'll be reading out to you what his thoughts are about this session and what he wants us to take back. So on this note, just assume that this is Laolu speaking. And for those that know the chairman, we call him Chairmo. So I'd like to stand on existing protocols and I'll say good morning. I'm deeply honored to stand before you today at the BusinessDay Fintech Summit 2026, an event that has become definitive gathering for those who are shaping the future of money in Africa. I thank BusinessDay for the invitation and for the assembly that remarkably bring community of builders, regulators, and thinkers. The theme of this year's summit, the next financial frontier, intelligence, infrastructure, and inclusion in Africa's digital money economy, could not be more than apt. It captures the three pillars upon which our digital economy must rest. And my task this morning is to address one of the most urgent questions facing our industry, which is, how do we coordinate the actions of banks, fintechs, telcos, switches, regulators, and technology providers to build a financial system that is not only fast and inclusive, but also trusted, interoperable, and intelligent. Let us be clear. Speed without trust is liability, and growth without interoperability is basically fragmentation. The trust deficit and why coordination begins with credibility. Nigeria has made extraordinary progress in financial inclusion and digital payments. From less than 30% adult inclusion in 2 decades, we now have and stand at over 70% transformation driven basically by mobile money, agent banking, and innovative fintech solutions. Transaction values across our digital channels run into trillions of naira. But with that scale comes its own vulnerability. Trust is the currency of finance, and trust is being tested daily by 3 persistent challenges. One of the challenges is around failed and disputed transactions. When a customer sends money and it does not arrive or even arrive twice, confidence erodes. Slow dispute resolution. So there has been disputed transaction, but the timeliness of resolution is extremely key. When weeks pass before a reversal or reconciliation is done, and the customer begins to blame not just the bank, he blames the fintech and the whole ecosystem for that failure. Lastly, will be around fraud and social engineering. When bad actors exploit gaps in identity verification and transaction monitoring, the innocent pays the price. This is where CB plays its own coordinating role. As the Committee of E-Business Industry Heads, we bring together stakeholders from banks, payment schemes, switches, major fintechs, all of the fintechs, and basically we do address all of these shared challenges. We have built frameworks for incident management, consumer protection protocols, and shared fraud intelligence, but we must go further. Now, building a trusted system requires 3 coordinated actions. First, a binding service level agreement across the entire digital payments ecosystem, the value chain, from bank to switch to fintech and even the agents, so that every party knows its obligation to the customer and also to each other. Secondly, a shared dispute resolution utility that uses AI to investigate and to resolve failed transactions in hours and not in weeks. Thirdly, a customer-centric refund guarantee scheme that reimburses the victims of certain categories of fraud quickly while pursuing recovery in the background. Trust is not a brand promise. It is a system property, and it must be engineered through coordination. Interoperability, the missing middle of African finance. Let me now turn to the second pillar, which is around infrastructure and specifically interoperability. Nigeria has made significant investments in national switches, NIPS, and various other payment gateways that we have in Nigeria are doing a lot. We have the bank verification number, BVN, and now the NIN as the foundational identity layers. We have also witnessed the introduction of open banking regulatory framework in Nigeria by the Central Bank of Nigeria. This is creating new possibilities for data sharing and innovation. Yet, the reality for most customers and businesses is still one of friction. A merchant with accounts in 3 banks cannot easily see their consolidated position across a single dashboard without any expensive middleware. A customer who wants to move money from a fintech wallet to a bank account still encounters limits, latency, and sometimes outright failure. A lender trying to verify a borrower's transaction history across multiple providers faces a patchwork of APIs, formats, and permissions. Why does this persist? Because interoperability is not just a technical problem. It is commercial, legal, and a governance problem. Banks and fintechs compete. That is healthy though. But competition at customer layer must be supported by cooperation at the infrastructure layer, just as competing telecoms also share towers and numbering schemes. Effective coordination on interoperability requires technical standardization, common API specifications for payments, balances on transactions, the history and identity. CB has been working with NIPS and the Central Bank of Nigeria to advance this agenda. Commercial reciprocity, a fair pricing model that compensates the data providers and incentives participating with the various companies and also the various ecosystem, creating various barriers is also critical too. Governance and dispute resolution. A neutral body needs to oversee the rules of engagement, handle non-compliance, and involve the standards over time. I am pleased to inform you to note that the industry is moving in this direction. Several of our member banks are piloting interoperability and use cases, from cross-platform savings aggregation to unified credit scoring. But we need to move. We need to move from pilots to production, which is going to be at a greater scale. My call today is this. Let us commit to a national interoperability accord. I'll say it again. Let us all commit to a national interoperability accord, which is going to be built on the agreed frameworks, binding frameworks endorsed by the Central Bank of Nigeria that sets clear deadlines for all licensed financial institutions to expose core read and write APIs under common standards. Let us make Nigeria the most interoperable digital economy in Africa within the next 24 months. Intelligence from reactive reconciliation to proactive coordination is one other issue I want to bring up. It brings to the third frontier the issue of intelligence. The word intelligence is often used loosely. It is as a synonym for automation of analytics or analytics. But I want to be specific about what intelligence means for a coordinated financial system. Intelligence means that the system learns, it predicts, and it adapts. I'll repeat again. Intelligence means that the system learns, predicts, and adapts. Today, most financial processes are reactive. Reconciliation happens after settlement. Fraud detection happens after authorization. Dispute resolution happens after customer complaints. This is the legacy architecture of a batch-driven, siloed world. In an intelligent system, coordination is continuous and real-time. Let me offer 3 examples of what this looks like in practice. First, intelligent reconciliation at scale. Recently, CB partnered with an industry player for a round-the-table on artificial intelligence and how it can transform reconciliation from a lagging manual spreadsheet exercise into real-time control mechanism. AI engines learn transaction patterns across multiple systems. Bank cores, switches, fintechs, the fintech ledgers, settlement files, and automatically match, flags, and resolve exceptions. This eliminates revenue leakage, reduces operational strain, and gives regulators and management real confidence in the numbers. Secondly, intelligence and fraud coordination. Today, fraud detection is largely institution-specific, but fraudsters move across institutions. An intelligence system would share signals across the ecosystem. A sudden spike in failed OTPs is a warning. A new merchant category attracting unusual chargebacks, and a pattern of social engineering which targets specific corridors is also an issue. With machine learning models trained on pooled data, the entire ecosystem becomes more resilient than the sum of its parts. CB is already exploring a shared fraud intelligence utility with the support of key technology partners. Intelligence and liquidity with settlements. One of the hidden costs of fragmentation is the amount of capital that sits idle across multiple settlement accounts and partner ledgers. Intelligent coordination can optimize liquidity, predicting net settlement positions across institutions, suggesting intraday sweeps, and reducing the cost of floats. This is not just efficiency, it is inclusion, because lower costs enable lower value transactions. And this ultimately becomes economical and viable. But intelligence, we all know, requires data. And data requires trust and governance. The industry must answer critical questions. Who owns the data? Who can train models on it? Who are the privacy safeguards? How do we prevent anti-competitive behavior? These are not technical questions alone. They are questions of coordination, and that is precisely why CB exists. To facilitate discussions on how competitors become collaborators on foundational infrastructure and for the benefits of the growth of the industry. I must say that the coordinated future is our choice. Distinguished ladies and gentlemen, let me conclude. We stand on a remarkable moment in Nigeria's economic history. Our digital money economy is growing faster than almost anywhere in the world. Our young developers, ambitious fintech founders, forward-looking regulators have put us on the map as Africa's most exciting fintech destination. However, growth without coordination is what? Growth without coordination, it will be chaotic. Speed without trust is unsustainable, and technology without governance actually serves no one. The future we want: a trusted, interoperable, and intelligent financial system will not emerge by accident. It will be built by deliberate coordination that will seek banks opening their APIs and embracing ecosystem thinking. Fintechs adopting common standard and shared security frameworks. Switches and infrastructure providers evolving from pipes to platforms. Regulators providing clarity, incentives, and where necessary, mandates that are required. And CB will continue to play that role as the honest broker. The table where all parties sit, disagree constructively, and ultimately agree on the rules of the road. I am optimistic. I have seen that this industry can achieve when we all coordinate. From the rapid adoption of NIPS instant payments, that's NIP, to the resilience that we built during cash scarcity period. We have done hard things before, and we can do them again. So I leave you with this as call to action. Let us not just leave this summit with the insights, but with commitments. Commitments specific to interoperability of major milestones. Commitments to shared fraud intelligence. Commitment to real-time reconciliation standards. And commitments, most importantly, to the customer. The Nigerian consumers and businesses who truly deserve a financial system that works. The next financial frontier is not a distant horizon. It is here, and together, through coordination, we will build it. Thank you all, and thank you all for your time.
Another round of applause for Abidemi. Make that better, make that better. Thank you so much, ma'am, for that insightful session. Please convey our gratitude to the chairman of the Committee of E-Business Industry Heads. Thank you. I would have loved to ask what was our biggest takeaways from this session, but we are short of time. But during her session, I heard her make mention of the word interoperability. Am I correct? Systems, intelligent systems, coordination, and how trusts can be built in the fintech ecosystem. Now we're going to move very quickly, just slightly altering our order of events today. We're going to be moving to our panel session, the first panel session, would also dwell and answer some of the questions that she has raised in this industry presentation. The first panel session for the day is titled Intelligent Finance, How AI, Data, and Automation are Rewriting Financial Services. First panelist. The first panelist that we will be welcoming to the stage is Mr. Blessing Ehizi. A round of applause for him. Make that better now. This is my CTO. Sir, you can, sir? Please. Yeah, it's much more better. Mr. Blessing Ehizi is the Chief Technology Officer at First City Monument Bank. They are one of our sponsors today, our partners. Blessing Ehizi, yeah, you can sit anywhere, sir. He has over 24 years of leadership experience across banking technology, digital transformation, and enterprise resilience. A respected voice in Africa's financial technology space, Blessing is at the forefront of applying AI and automation to reshape how financial institutions operate, compete, and serve customers, and is recognized among the top CTOs powering digital innovation in Nigeria's banking ecosystem. He holds postgraduate degrees from the University of Salford, Stanford Graduate School of Business, and Manchester Business School, and has furthered his executive education at INSEAD in leading AI and digital transformation. Ladies and gentlemen, a round of applause one more time for Blessing Ehizi. It's a pleasure to have you here with us, sir. Next on our list, Ibukun Humphrey Oluwagbenga. It's like you don't know who you are clapping for. He will shut down the OP ecosystem. All right, Ibukun Humphrey Oluwagbenga, he's the head IT business support and operations at OP, our headline sponsors. A round of applause for him. Ibukun is a seasoned digital product and payments leader with over 13 years of experience driving innovation across fintech, digital banking, and payment infrastructure. He has a strong track record in scaling payment operations, improving system reliability, and delivering high-impact solutions across digital channels. Prior to this, he held leadership roles at major financial institutions where he drove major initiatives in digital channels, merchant acquiring, and transaction optimization. He is recognized for his expertise in financial inclusion and brings deep technical knowledge spanning traditional and modern fintech architectures. Ladies and gentlemen, Ibukun Humphrey Oluwagbenga, thank you so much for being here today with us, sir. Moving very quickly, Mela Cloud Ake. Mela Cloud Ake. He's so good at this, he's named after a popular AI. Welcome, sir. Mela Cloud Ake is the president at Stakeholders in Blockchain Technology Association of Nigeria. He's an attorney with over a decade at the bar. His areas of expertise include corporate law, tech law, sports law, and human rights, amongst others. He has advised a plethora of tech startups and is a key contributor to the development of CBAN's Code of Ethics. He has given legal advice to and helped formulate leadership strategy for CBAN's leadership. Ladies and gentlemen, Mela Cloud Ake. A round of applause for him. Last but very not the least of our panelists is Salawu Damilola, the head technology, innovation, and fintech practice at Olaniwun Ajayi LP, ably represented by Eustace Aro. A round of applause for Eustace Aro. Eustace Aro is a lawyer at Olaniwu Ajayi LP, and he will be representing Mr. Salau Damilola. Now, driving the conversation further is another expert as regards the fintech ecosystem in Nigeria. Please put your hands together for the Managing Director at Intermark Consulting, Dr. Adeyinka Adeyemi. A round of applause for Doc. Dr. Adeyinka is a distinguished strategist and board advisor with extensive expertise in digital governance, digital finance, inclusion, and payment system across Africa. As the founder and former managing director of Intermark Consulting, he has led numerous high-impact initiatives in partnership with international development organizations such as USAID, UNDP, and the Lagos State Government, driving e-governance adoption and digital inclusion in Nigeria, Rwanda, and Zambia. Earlier in his career, Dr. Adeyemi held senior roles in the banking sector, including Assistant General Manager and Head of E-Banking at Societe Generale Bank, where he pioneered Nigeria's first credit card product and helped establish foundational digital banking infrastructure. He holds a Doctor of Business Administration degree from the University of Lagos Business School and also an MBA from the University of Navarra, Spain, with advanced degrees in public and political administration from the University of Ibadan. Ladies and gentlemen, Dr. Adeyinka Alfred Adeyemi. A round of applause for him. There you have it, ladies and gentlemen. Your panelists, in all their expertise, all their technical expertise, are going to be taking the center stage for the next 45 minutes. A round of applause for your panelists one more time.
All right, good morning again. Distinguished guests, members of the Fintech Association of Nigeria, Fintech enthusiasts, ladies and gentlemen, you're welcome to this panel. And I'm really honored to moderate this conversation around intelligence finance. Intelligence finance is a topic that is very close to my heart, very dear to my heart. Because if you look at the industry in the last 10 to 15 years, how the industry has evolved, if you also play that against the future, probably the next 10 to 15 years, then you will understand the importance of such a discussion or such a conversation, because it's an epoch-making moment where we'll be discussing and crafting not just ideas, but strategies to confront what is ahead of us. So this morning, I'm delighted to be here. We have distinguished panelists that have been identified, who will be sharing from their experience and talking to us about, the different perspectives that they hold there and that they share with respect to the topic at hand. Again, our topic for today is intelligent finance, how AI and data, and automation are rewriting financial services. We would like to locate that within the context of Nigeria, but please feel free to give examples across the globe. Now, I have a set of questions that have been prepared here for the panelists, I'd like for this session to be as interactive as possible. Let's engage and let me know if other panelists or if you have comments on whatever question has been asked to someone else. I'd like to start with Blessing Ehize. When we talk about intelligent finance, I'm sure from the perspective of your bank, you've built control and stability over the years. How is your bank re-architecting or rewiring, to use the phrase that has hitherto been used by Dr. Stanley Jacob? How has your bank re-architecting the core systems to support real-time intelligent finance? What are you doing to rewire the frame, basically?
Okay, thank you very much, and good morning, almost afternoon, everybody. So first and foremost, like you've said, banks are wired for stability, security, and compliance. When you start talking about AI with all of its flexibility, interoperability, and all of that, it kind of throws some bit of spanner into the wire, or unwire the wire, if I want to use Stanley's words. However, AI in itself comes with its own governance framework. Today we have the AI management system that helps manage worldwide what you do around artificial intelligence. We've keyed into that as a bank. We've just got certified on ISO 42001, at least to ensure that whatever AI we're doing is running around the fabrics of governance and accountability. Having that in mind, you're able now to move at scale, you're able to move with speed, because you have the right accountability and you have the right framework to deploy AI into a banking institution. Thank you.
All right, thank you very much. So your response tells me that you're leveraging intelligent tools, particularly AI, to assist your bank to reconstruct and to rewire the business of the bank. Excellent. Great. But let me go to Claude and ask about blockchain, right? You lead the Stakeholders in Blockchain Technology Association. Please tell the audience what blockchain, what's the promise of blockchain in this regard, in terms of decentralization, with respect to intelligent finance. What role do we expect blockchain to play? We've heard what the bank is doing with respect to AI. What can we, get out of blockchain?
Thank you very much, sir. AI and blockchain are two of the youngest innovations globally in technology, especially as it relates to finance. They play different roles, but they are also very compatible. AI, as the name implies, artificial intelligence, is there to help people maybe use the word think, make better decisions, help to erase blind spots in decision making, analyze data, and so on and so forth. It's a very brilliant executive assistant and semi-consultant. Blockchain, on the other hand, is about creating systems that are tamper-proof, that are immutable, that speed up operations, and so on and so forth. And so financial organizations, fintechs, and so on and so forth can combine the powers, the advantages of AI and blockchain in making better decisions, in analyzing data much faster and much better, and also creating those systems that are tamper-proof. So blockchain brings what I call it the trust layer, and AI brings the area of much better analysis. So it's a symbiotic technology interplay here, and it's wonderful for fintechs. And I'm sure that there are several financial organizations that are looking into that. I know OPay, for one, has part of it. I was talking to the head of IT support while we're seated. Part of its infrastructure is actually based on blockchain technology in their relationship with Zone. So it's already happening. A lot of people don't know that, and that's what we call abstract blockchain, where blockchain is just put underneath, and the users don't have to interface with it directly. They don't know that they're dealing with something that is using blockchain technology. So it's already in play.
All right, thank you very much. Thank you very much for that. So there's a convergence at some point between those two technologies. They're actually both tools, and financial service providers will then have to determine how they want to, deploy those tools for the benefit of their business.
Exactly.
But let me go to Damilola, right? And my question to you will be to check, because you're a lawyer, and you focus a lot more on laws with respect to technology and the sort of tools that we're talking about today. So as we move away from rule-based systems to AI systems, particularly, not just AI, but other, tools, technology tools, how do we handle governance? For instance, how should financial institutions rethink governance for these, technology tools today? What's your perspective on that?
Thank you. Good morning, everyone. My name is Eustace, Senior Associate at Olanu Ajayi. Obviously, based on what we have now, most companies, there's a misalignment in terms of governance. What companies have right now, there's a misalignment because what's the governance structure you have right now was built on something different entirely. And so it does not work. What needs to be done when companies are looking to approach these innovative tools, whether it's AI, whether it's blockchain, is to first, and I would like to borrow some of the scope that the CBN had proposed in its cybersecurity rules. First, it starts from the board, just as every other governance structure starts from the board. Now, there has to be some form of understanding that any decision, whether it's automated, it was automated, or it was based by a human intervention, the board has the ultimate responsibility. Once we have that primary understanding, then we need to fix the gap in knowledge. All right. When you look at most board constitution, you need to have, whether it's also depends on the establishment, whether you need to have a director that is well experienced in AI, or you need to have an advisor or trainings, whether it's trainings to bridge the gap. So digital literacy is not enough. You have to move from digital literacy to some form of understanding of the algorithm involved. Because if you're going to direct, if you're going to provide this structure, you need to have that form of understanding. But aside from the board, if you want to zero in more specifically, the risk committees in the various institutions, the AI has to be, or the innovative tool has to have a predominant position when you're considering risk. It's no longer a sub concern. It's a predominant concern if you're going to focus on these things. So these are things that companies would need to rethink when they want to approach innovative tools. You need to think about it from the angle of the board. You need to think about it from the angle of the risk committee, basically. And you also need to think about internal processes, internal structures that you have. Whether you're thinking about before deploying the tool, what have you put in place to ensure that in terms of AI, what have you put in place to ensure that you've addressed the risk of bias? You've addressed those subtle risks that AI poses, whether it's post-deployment or pre-deployment. These are things that you need to consider as internal rules for governance.
All right, thank you very much for that. Let me. You want to add to what he said?
Yes, thank you, sir. Something my legal colleague just said triggered.
Are you a lawyer as well?
Yes, I am. Something I think I should add. He talked about bias. I'm also somebody who is versed in AI ethics and governance. It's a training I've also gone through. So I'm technically an AI ethicist. One of the concerns about AI is the fact that its decision-making process is referred to as a black box. Even the people who have developed AI claim that they don't know how it arrives at the decisions it does, how it thinks, quote unquote. One of the things that blockchain helps to do is to resolve the issue of bias, create a system where all of the data that goes into building the AI is on a blockchain foundation, and therefore can be analyzed better to understand how AI thinks, how it arrives at the decisions that it does.
Okay, thank you very much. Let me just add to that. I mean, I train boards with respect to governance from the perspective of the Society for Corporate Governance of Nigeria. I'm a facilitator, and we've trained banks and, fintech, companies. My experience talking to the boards is that it's tough. I mean, you can say that, and that's what the rule says, that the board holds the highest level of responsibility when it comes to governance. The board is held responsible. However, the board has committees. And then you have the C-level officers in the institutions that report to the board, to the committees that report to the board. But a lot of the time, rules are embedded in algorithms, right? The board do not understand that. The committees do not understand that, right? But the C-level guys do. It's a matter of reporting, right? Which is why sometimes when there's an infraction, organizations fail to report even to the regulator, but we're trying to correct that now. And they fail to report to regulator because they find it even difficult to report to the board because of sanctions that come with it, depending on the level of infraction and the consequences of those infractions. But it's a topic that, very important because a single hit can wipe out, what the board is interested in, which is typically financial spreadsheets. Have we made profit? And that's historical. Now, a lot of responsibility will be on, governance, ethics for tools like AI, like blockchain, and so on and so forth. I think we can move forward from there. Please make notes. I'm talking to the audience. Make notes. If you have questions, I'm sure the panel will be able to take on those questions eventually as we go. Now, let me come to Humphrey. In your organization, system reliability is not a back-end concern. It's a core. We know that organization to be very reliable. Obviously, we've talked about how some of your processes are built on blockchain, and I'm sure also AI and so on, right? How are you redesigning operational infrastructure to support these technologies, AI, blockchain, for the benefit of your customers?
Good morning, everyone. And I'm happy to be here, and I bring you greetings from OPE, especially from the CEO and CTO and the board. I know a lot of people want to hear the story about OPE, but the nitty-gritty is out there in the public domain, and we can go. But the reason why we are here is really about the financial intelligence and how AI can be used, to drive financial intelligence. From our perspective, or from where I work, reliability is not just a metrics. It's not just like a technology metrics that you need to use for your operation day to day, but rather we classify it as a product itself, a product that needs to be monitored, that needs to be given serious concern. Because, and why are we doing that? Because it is tied to the trust that customers have in us. For example, I can see a lot of speakers, especially the master of ceremony, mention something around coming here today, and every bus driver, or a car hailing transportation uses OPE. That shows the level of trust that customers have in the brand. And because it is tied to customers' trust, we have to be careful in what we do. And a lot of you also know that we're different from conventional bank where, like FCMB, the CTO, your customer wears suits, they send emails. A lot of our own customers, any little glitch, they can come to the office, and start asking questions about what happened. So we can use AI, and for every organization that wants to scale, you must use AI. However, we cannot allow AI to control decision making. So there have to be a balance. And I'll give some examples. Examples around how we process transactions, maybe around fraud detections as well. For transaction monitoring, let's take an outward transaction, for example. The customers try to send money from OPE to a destination bank. One thing is certain, OPE processes that transaction. It moves to a switch, and thereabout terminates in the financial institution. Along that chain, something is happening there that you can use AI to drive. Because you want to drive reliability, a lot of us have different switches that we try to process transaction through. So what helps you to determine the one that is really reliable? You can use AI. So AI can help you, can tell you this switch is very healthy, and based on the logic or algorithm that you have put in place, it translates that into something you can see and that you can monitor. However, you cannot leave that specifically to AI. The same thing for fraud monitoring. In fraud monitoring, a lot of us are familiar with our security features, like the 8 security features, whereby one of them is large transaction shield. Maybe you are trying to do a transaction and it tells you to nod your head, open your mouth, and the likes. It's because it has seen historical data and find out that something is not right. Probably there is a behavioral change, or there is uncertainty in what you are trying to do at that moment. Maybe you are a small transaction kind of person, but one time you try to do a large sum of transaction, it flags it. It spots that. That is the beauty of AI.
Yeah.
However, you can't say that transaction in itself entirely is not legitimate. So in that case, you have to put in what they call a progressive control. whereby you can now take the transaction a step further, like probably enter OTP or authenticate or validate with biometrics and the likes.
Humphrey, let me interrupt you. Yeah. So for time, and I apologize for that, you're head of IT in OPA, right? I mean, just by way of summary, would you say that, I'm coming to you, Claude, after this, huh? By way of summary, would you say the reliability that you're experiencing in OPA, which you've nicely described, is as a result of AI or similar transformative tools? Or are there other factors? Because sometimes we downplay other elements that actually give us the sort of results that we experience or that our customers experience. In a nutshell, just tell us, will it be right to say that reliability is,
Yes. It's AI actually, but in a controlled manner. And that's what I'm trying to say. It has to be controlled. So AI tells me transaction behaviors based on the logic I have set. Mm-hmm. For example, let me give you the switches that we have. We know we have a lot of switches out there, and you want reliability for your customer. Don't forget, I mentioned the word trust. Customers don't want to see that transaction fail. They just need their money, and they don't care if it's AI or not. Mm-hmm. All they're interested in is that my fund transfer is successful, and that you can continue to trust the platform, and that is what we stand for.
And that's what they get.
That's what they get.
And it's attributed to.
It's attributed to AI in a controlled manner.
Excellent. Thank you very much for that. Thank you. Now let me go. Apologies, Claude. Let me go to Blessing. Right. Again, you lead the technology in FCMB, and I know that before the advent of transformative technologies, AI, machine learning, maybe even robotics, and so on, you have had legacy systems, legacy data. Some people will consider, that as a huge problem. How do you transition your legacy data to intelligent, finance environment? What is your bank doing, or how are you dealing with data fragmentation and quality issues, the quality issues around legacy data within the AI environment?
Okay, thank you very much. Like you said rightly, for a bank and a bank of our age and status, you would imagine the amount of data coming in over the years.
Yeah.
But we realize the fact that the backbone of intelligence is data, whether it's blockchain or AI itself. First thing that we've been able to put in place as a bank is a data strategy. What do we really want to do with our data? What data refers to what segments of our organization? Now, once we had that in place, we were able to build out a master data model. In this case, we want to know what identifies a customer. For some old systems, it might be some old account number. We now have BVN. So there's several things put together that forms one identity. And so while you're building your master data, you're trying to look for that one identity. Regardless of how old the data is, whether it's structured or unstructured, you're able to pull out that one identity. And that's when we started building our data lakes. As far back as mid last year, we already had the data lakes up and running. And that's actually started the transformative journey in AI for us. Because at that point, we're now able to identify who one person is across all the data sets, and we're now able to transact with that person regardless of where it's coming from. Whether it's legacy data, recent data, whether it's using a structured system, an unstructured system, and we're able to place that together. And we start building our models our SLMs are on top of that, and it's amazing what's coming out of that as we speak currently today. Thank you.
Fantastic. Thank you very much for sharing, that perspective, because it's very important. I mean, there's customers that I'm sure you've had for 10 years, maybe more, who will have been, at the time you are implementing AI, will probably be, afraid to say, what happens to us. But let me come to Claude, because that takes us to the place of regulation. You cannot have intelligence finance, or you cannot be talking about intelligence finance without talking about intelligent regulation, right? So my question to Claude will be that, are there use cases, particularly with respect to blockchain, which is your specialization, that we can, I don't want to say recommend for regulators, but bring to their attention, crypto and all of that, when it started, typically technology is, ahead of the curve from where regulators are, the catch-up, typically. But are there use cases that can provide some, safety net for regulators if they are going to apply intelligent regulation as well, that you can recommend? Is there regulatory caution?
Okay, thank you very much, sir. If I understand your question correctly, I'm supposed to think like a regulator right now.
Yes.
Well, I'm not a regulator, but I have a fair understanding of what they do.
You're supposed to. You're not to see yourself as a regulator.
Yeah.
You are a specialist.
Yes, I get you.
I get you. To intelligent regulation.
I say that because I don't have domain knowledge of being a regulator. So, in as much as I could use my imagination, my analysis will be somewhat limited. However, I could attempt the question by saying that yes, because blockchain, one of its benefits is offering tamper-proof record keeping. That is already a huge win for regulators, because records are very important to agencies, whether they're federal, whether they're state. They need proper record keeping, basically perfect record keeping, to know who has the right licenses, who has the right certifications, who has the right approvals and permits, which ones are expired, and so on and so forth. So blockchain definitely is something that they should consider building systems upon and around. That's for their regulatory databases. So that does a lot for them. And if they're willing to go further, to have the general public, right, interface with them through those systems, it also provides them a framework where things can easily be monitored from anywhere.
Yeah.
And it gives them less headache to do so much legwork and more intelligent work. So that's my thought.
All right, thank you very much for that. I'm told we're running out of time. We have 14 minutes. Maybe I'll extend it to, 15, 20 minutes? Because it's interesting what the feedback that we're getting from this panel. Now, but we'll begin to round up anyway. Now to the lawyer with Olaniyan Ajayi, that's Damilola now. Still on regulation, we know that technology typically outpaces regulation, right? Now, the question is, what specific legal or regulatory infrastructure can the regulator rely on, or that is still missing, that can fully support AI-driven initiatives? What will be your recommendation?
Okay, thank you for the question. First, unlike what we would see in the EU has established its own, just like they did for data protection, they've established their AI Act, which sort of provides a very, very wide scope of regulation on AI generally. we would need something like that in Nigeria. And when I say that, most innovators come for me. Like you're looking for us to be regulated, but then again, one of the things you'd always look for is clarity. All right. So in this area, I would say maybe an AI Act, maybe an AI regulation, clearly that provides information or provides direction on how certain things would go. Now, I'll give you an instance now. We have various means of identification around different sectors in the country. Now, you go to some place, you need your NIN for identification. You come to the banking sector, it's the BVN. We need one unified system that brings everything together. There's no need for different means of identification. One means of identification. We need, would I say, regulation around interoperability of information from one sector to the other. I see, I won't say we're at zero at the moment, because obviously we're not. Anyone who says that is not being truthful, because we have something around data protection that regulates how data is being used.
Yeah.
We have something around, we have the AI strategy policy. We provide some form of ideology on how the country is thinking about AI. And we also have the open banking regulations from the CBN, which is also supposed to boost the use of data towards financing. So we have some things already, but we just need some clarity in terms of intellectual property, in terms of liability, in terms of bias, in terms of trust mark, in terms of what transparency. Because these are what provides clarity to the man who is building. These are what provides clarity to the person who wants to adopt the system into this tool into their system. And that's clarity is what we need at this point.
Sure. Thank you very much for that. You mentioned interoperability, and I did hear the vice chairman of CB in her speech talk about a recommendation for a national interoperability rail or something, that's something that you support, right? If you think that, that's an infrastructure that can...
So for us to really benefit from when it comes to AI, that's exchange of information has to be
to happen.
We cannot, there's no two ways about that.
Sure. All right, thank you very much for that. I'll ask the last question in this round to the gentleman from OPE, Humphrey, or Ibukun, both. And then we'll go to the last round, and then we'll close. Thank you very much. Now, like you know, AI is as good as the environment where it is situated, right? Beyond governance and ethics, what are the operational challenges that you see as an operator now, that you see with that, tool within the context of this environment?
A lot of challenges actually around data, because it's a serious matter that we need to discuss, and if time permits, to really dissect it and see a way forward out of all these challenges. Because data don't come from a single environment from where we stand. It comes from the switches, banks, partners, and the likes. And processing this data, or you feeding the right information to AI model, definitely ensures that you get the best out of that model. We're all familiar with the simple ChatGPT, Claude, and the rest. Using the right prompts gives you the right outputs, right? So what we've seen majorly is maintaining consistent data real-time across various touch points. That is one of the challenges that we have today. Another one is around data quality. So if that data is not clean or is incomplete, there's high tendency that you start experiencing probably a false positive outcome, which is not good for business most of the time. Then we talk about fragmentation as well. which you mentioned around interoperability. Today, different players, you see them interpreting errors around transaction monitoring differently. Somebody, what is invalid transaction to them in terms of the error the system is speaking to is different from what the other processor is mentioning. So there have to be a kind of harmonization, which I agree with what the speakers have mentioned earlier. But that basically sums it up around the challenges that we face. And these are things that we at OP has resolved and will continue to resolve in order to make transaction ecosystem better.
Thank you very much. Thank you. And for this last round, I'd like to reverse the order and start with you, Humphrey, and then we go the other way. And this final round is a sneak peek into the future. I mean, because a lot of things we've talked about now is based on current experiences and current developments. Let's look into the future and predict, sort of, what our expectations are with respect to these technologies. So for Humphrey, I'm going to ask what your perspective is around operational accountability, because we know that going into the future, financial systems will definitely be increasingly automated. We will be seeing a lot more of what we're seeing now in terms of new, solutions, new technologies, new, automations. How do you then see, operational accountability in the future?
Okay. For me, I think accountability should be more deliberate, even when AI is involved. A lot of people believe with AI, there should be less accountability because it does all the work. But for me, with AI, it makes accountability even easier because it translates a lot of information to you that you can rely on to be able to make decisions.
Yeah.
Again, I'm very good with operations. So I will use another example in transaction monitoring again. Imagine you experience a spike in transaction. You shouldn't be quick to point accusing fingers, like maybe that switch is down because we are used to it. Mm-hmm. Rather, you should be able to investigate end to end using the transaction trail to know where the breakdown happened. Like, is it from the processor? Is it from the switch? And the likes. And also, we need to be able to define accountability among service levels. Mm-hmm. Who manages payments? Who manages frauds? Correct. Who is in charge of customer experience and the likes? So that it's not muddled up. So that we know who is responsible for this and know who is responsible for that. Then we also need to make the model very intelligent to the extent that it is easy to fall back, even though there is a delay or there is an issue with the model. So have that tendency that, okay, the confidence level of my AI is low, so I have to be able to fall back to maintain integrity to the customer. Okay. So those are some of the accountability models that we can put in place.
Thank you very much. Now I go to Claude. And my question will be around tokenization and smart contracts. Don't forget, we're talking with the future in mind. And we've seen a bit of, to some extent or degree, tokenization, smart contract in place. What do you see as the future of tokenization and smart contracts, particularly in the financial services space in Nigeria, going into the future?
Okay, thank you very much, sir. So, tokenization, did you say tokenization and smart contracts?
Yes.
Okay.
You can take either one.
Okay, so tokenization basically does a wonderful job around fractional investment. So it's much easier for someone with, let's say, 500 naira, just giving an example, to make an investment through tokenization, right? So that opens up a lot of opportunities for the capital market. I know in recent times, the SEC has been very, very concerned and has expressed concerns around the public's participation with the capital market. They feel that they need more members of the public to get involved with the capital market. So I think building systems around blockchain, using tokenization as an example, as a use case, helps do that. Because let's be fair, a lot of people may not feel like they have the resources to buy as many shares as somebody like my friend Ibukun here, who has a wonderful job with OPay. But, children of the poor like myself can say, okay, with the little I have, I can get into investment through tokenization. So blockchain makes that more accessible to just everybody. So that's something that the capital market should definitely embrace.
I really like that closing around capital markets because Stock Exchange Commission, for instance, is within the framework of financial inclusion, part of the financial inclusion, committee system set up by the central bank and so on. And they really need to hear this. They need to understand what, some of these responsibilities behoves on them to deliver or to perform. So thank you very much for that perspective.
And if I may add, talking about smart contracts, one of the wonderful use cases of smart contracts is in insurance. Of course, the issues of claims, verifying claims, investigating claims, and all of that. Smart contracts come to play. They make it, they remove the, what I call a human interference layer, even though there will still be need for humans to be in the loop somewhere. But smart contracts speed it up with their if-then logic.
Thank you very much.
Thank you.
So now to Blessing. Looking ahead, how do you see let's generalize. How do you see financial services operate?
Yeah, please, if you can use the mic a bit. I wasn't very clear.
Battery's dead. Right, so we're looking ahead, right? And I'm asking specifically, if you want to answer specifically for the bank or generally for the financial services space. Question is, how do you see banking, financial services evolve with the opportunities and advantages that AI brings to the table?
Okay, thank you. I don't think that there's a way around it. It's a
Please go ahead. Go ahead. Yes.
It's a case of eat oils you'd be eating. Globally, AI is taking center stage. Whether you are a bank or now. Okay, can you hear me? Okay, better. Yeah, so globally, we're seeing AI take over every sector. And
AI is coming to enable businesses and change lifestyle. I guess there's a popular saying that goes that AI would not take your job, but the people that use AI definitely will. We're also looking at this as a case where banks are increasingly becoming fintechs, and fintechs are also increasingly trying to be banks. So you don't have a choice out of it. The first person to get to the middle wins the game. And this is the race that we are on. My brother here said we are wearing ties and our customers come, and but that's not actually true because our customers are actually on the streets right now. So we're in a competition, although we're co-creating, right? So the good thing with it is we got to learn every day, and we learn from all of the sectors, and we just have to put our best foot forward in the game. Thank you.
You can clap if you want to. Yeah, we're going to ask. Oh, okay. Thank you. So I'm told we're supposed to have, finished by now, and then we ask questions. So I'm coming to you after Damilola. Very briefly, 1 minute, really. This has to do with consumer protection and trust. What legal or policy tools do you think, we can put in place to protect the customer or consumer, as the case may be, with respect to, of course, AI and these technologies?
Okay, thank you for the question. For me, the number one tool will be transparency. It will be top of my list, because you would want the man in the street using your tool or using your service to know that his information is being processed through AI. It's going to be there's going to be automated decision making there. There has to be some form of transparency. There has to be some form of informed consent if they're going to have to consent. So I need to know. I need to have that information. That is what will build the trust. Aside from that, I would typically want to suggest that we have things around a trust mark. All right, a trust mark, and I use that very loosely. So if you pick up any random fintech app and you open it, one of the first things you see is that we are licensed by the CBN, we are licensed by the SEC. That gives the customer that form of assurance that I'm not just giving my information out to anybody. We need something similar, whether it's from a regulator, whether it's from to give that customer some assurance that I am protected. All right, my information is not. I'm not just throwing my information to a dark hole. Aside from that, most times, as my two panelists have spoken, you would have customers who always want to challenge decisions. If you're having automated decision making, there's someone somewhere who is not happy that the AI has said he can't get loan. Who the AI has said, oh, I have to, the max you can take is 1 million, and he believes he should be entitled to 10 million, and he wants to challenge that decision. You need to give that man a listening ear. So there has to be that individual there. There has to be a gap for someone to challenge this decision, for someone to speak up and say, oh, what is that someone to speak up and say, yes, I do not believe that this is correct. Yes, I understand. Yeah.
You had 1 minute.
Thank you very much. Yes.
All right, thank you very much. I'm sure we understand, the point. Can I take one question? Is that fine? From the audience? No questions. Okay, thank you very much. Thank you very much. I think we've overstayed our welcome, to be honest. So on that note, we'd like to wrap up this panel session. Thank you very much, everybody, for listening. The takeaway for the audience, if you don't have a question, I'll ask you, is to say that intelligent finance is here to stay, is with us forever. Question is, how do you adapt, adopt, and prepare for the future that is ahead. Thank you very much.
You can make the applause better for our panelists. Make that better. I see some angry hands not clapping. Thank you so much. Our panelists, can you please still remain on stage? We're going to be having a quick photo op. Joining our panelists on stage, Executive Director at Business Day, Ijeoma Ude. Please, can you make her welcome on stage? A round of applause for our Executive Director as she comes to the stage. We'll also be joined by the Chairman Committee of E-Business Industry Heads, represented by Mrs. Abidemi here. Please put your hands together as she comes up stage. What a session. Just make space for the ladies. All right. And there you have it. Our first panel session has just been concluded. A round of applause for all our panelists. Please make that better for our panelists. There was so much to take away from this particular session. They always know what to do. Thank you so much, Doctor. Wonderful moderating. Thank you so much, OP, our sponsors, FCMB. Thank you so much, Olaniwo Ajayi, LP. Please, a round of applause for them one last time. One last time. So much knowledge here on this particular stage. Okay. Now back to regular programming at the Business Day Fintech Summit 2026. I can see one of our sponsors give me the idea, Nini, call my ad. But very, very quickly, we're going to be having the fireside chat. The fireside chat. Does everyone here have this program? Do you have this program? No. Okay. It will be shared very, very shortly. But we're back to regular programming now, and we're going to be having a fireside chat. This fireside chat, titled Unicorn Without Exit. Unicorn Without Exit. Who owns Africa's fintech boom? Now, our speaker for the fireside chat is none other than the managing partner at We Capital, Mr. Olu Oyinson. A round of applause for Mr. Olu Oyinson. Mr. Olu Oyinson, sorry about that. Yes. Is an emerging market seed stage investor and managing partner at We Capital, an early stage VC fund investing in promising tech companies in frontier markets. Before launching We Capital, Olu started his career in commercial banking with Nigeria's Guarantee Trust Bank, later working as a TEI consultant at Forrester, a global market research firm advising some of the biggest tech companies. He also worked at Silicon Valley Bank's early stage practice supporting early stage tech companies across the coast of the US. He holds an MBA from Holt International Business School with a concentration in finance and strategy. Ladies and gentlemen, another round of applause for Olu Oyinson from We Capital. Moderating this panel is Arese Ugu. A round of applause for Arese Ugu. She is the creator of the Smart Money Woman. How many of you saw the series on Netflix and on YouTube? Yes. She's a writer, filmmaker, and capital market strategist. As the creator of the Smart Money Woman, her work sits at the intersection of storytelling, finance, and culture. She's currently focus on building frameworks that connect fintech, capital markets, and retail participation in Africa. Ladies and gentlemen, Arete Ugu, the smart money woman. A round of applause for her. How many of you withdraw money from POS terminals here? Anytime you hear savings or currents, how many of you hear savings or currents on the daily? Hear savings or current? What comes to mind when you hear savings or current? Which terminal do you always see? Who wants to try? Which POS terminal do you always use? Huh? Money Point. Now, when I called Olu Elison, you forgot to clap for him well, because you don't know that in 2021, when Money Point was looking for money or looking for investors, he was one of those key investors that put a lot of money. I don't want to call it now, you can Google that. They put a lot of money in Money Point in 2021, and that money 53x'd in 2024, 2025, and they made about $8 million for their investors. This is Olu Elison. He's the managing partner at We Capital, and we are privileged and blessed to have him here, and also have Arete Ugu of the Smart Money Woman, a series for the first time that brought finance using Nigerian characters, making us understand how to handle and manage our money properly. I'm a guy, and I binge watched that series, and I learned a lot. So we're privileged, we are blessed to have you both on stage here today. Ladies and gentlemen, please put your hands together one more time for the fireside chat session. I'll be yielding the mic right now to Arete Ugu. Please take us away.
Hi, guys. Thank you so much for having us. This should be a very interesting conversation. Hi, Olu.
Hello, Arete. How are you doing?
VC's hot boy. I said VC's hot boy right now.
Sometimes I get scared when they make announcements like that, because you will have to provide me security as I'm going on.
So let's just dive right into it. Over the last decade, African fintech has created extraordinary value. So we're talking millions in users, billions in capital raised, several companies reaching unicorn status across the continent. But I think the more interesting question or conversation is around when you compare all of the money that has been raised to the amount of liquidity events that have happened or true exits, they're way fewer. So when we're having that conversation, you, Olu, have been known to be one of the first investors in Money Point. You put in $150,000, and that translated to roughly $8 million when you were exiting. So walk us through what led to that investment and what led to the liquidity event.
Thank you. That's a great question. Let me first put the caveat. The money is not my own. It belongs to the funds that I manage, right? So in case you want to meet me outside, I don't have the money. But I can talk about the transaction. Where would you like me to start? So first of all, We Capital is a pure play venture capital fund. There are not very many pure play venture capital funds in Africa. Because first of all, venture capital is a newish asset class in the world compared to like banking and financial intermediation. But in Africa, it's also much newer. And then there are pure play venture capital funds. That means funds that have government interference. We like to call them DFIs, right? But it's governments of other countries that have policy objectives. And so basically what we set out to do was to back a bunch of technology companies that were growing on the continent. The reason why I used to be at a company called Silicon Valley Bank, which a lot of people might know, doing East Coast transactions in the US. And then there was this small seed stage company. The CEO reached out to me on LinkedIn and said, oh, there's a Nigerian at SVB. We need to be friends. We're raising $3 million, blah, blah, blah. This company was Flutterwave at the time. And I think I just woke up. I said, something's about to happen, right? And I quit my job, packed my stuff, and started coming back to Lagos, right? My boss thought that was crazy. She told me, well, when this your experiment fails, I'll keep your job for like 6 or 8 months, right? Maybe we'll make you a contractor, but what you're doing is crazy. But that was when we started investing on the continent. And the conviction was that if we can get to raise even just $1 million, there are a lot of companies that need this money that can create incremental growth. And I think I did meet Tosin around 2017. Funny enough, he was at my house till midnight last night. I told him I was coming to talk about him today. And from that, you meet the founder, you develop trust, you find out the person's character, and then you go into the business. I'll keep it short. When we looked at this business, companies like InterSwitch, Paga, Flutterwave already existed. But this company was about to change from a B2B company to a B2C company, which was one of the things we pushed them to do as venture capitalists. As VCs, we're looking for exponential growth. So we're not necessarily looking for companies who are just profitable, right? Those belong to another source of funding. And so at that time, we found out that there was a moat that they had. For those who aren't familiar, usually in this industry, we call it moats, a unique competitive advantage, was that at that time, they used to build software for banks. So what you found at the time was that transaction failure rates was a huge reason, was a huge hurdle to adoption of more electronic payments. And what makes transactions fail is usually interoperability. And so we had a company who had been building software for banks, who understood the internal core banking application and the tech infrastructure of a lot of banks. These guys were best positioned to build something that could switch across banks. This was the bone we held on to as venture capitalists. As they say, the rest is history. We had to go and do some sort of cleanup to the cap table. We invested some of the money we had at the time. And I still sit on the board of TNAP, the payment company. And so we had to do what we could to help the company. But one thing that really also happened was COVID. And this is why preparedness sometimes meets opportunity. COVID made the company probably double the size we thought it would have been. When we did our investment memo, we wrote at that time, 2020, that this company could reach $938 million on the high side in value, right? It's probably the most accurate work I've ever done in my life, right? But as I see, the rest is history.
Okay, so but what actually led to the liquidity event? How did you get to $8 million?
$8 million keeps making me, let's just say liquidity event. So what happens is that it's finance 101, right? Money goes out, money goes in, more money comes out. This is the reason why we get up and go to work or do anything, right? So there's no finance without you being able to create some sort of value. And so there are a lot of ways companies exit, right? The capital markets, sometimes trade sales, sometimes M&As. We had a partial exit through a secondary. Basically, it means another investor taking the baton from you. And the underlying value creator, both in the private and capital markets, is that you can create free cash flow, right? This company has been able to significantly create free cash flow. And once you invest in a company that can create free cash flow, the exit comes quite naturally, because it's either someone who wants to take over that free cash flow, which is why we go and buy stock anyways. You want to take over the dividend rights, correct? And in the private market, people take over the future value of the free cash flow or the earnings or the possible enterprise value from you. And so what we did, VC funds are usually 10-year cycles. And so we were in about year 6 of this cycle, and there was going to be another fundraising, the one that you all heard, that actually took 2 years in the works. So I had to basically bite my tongue for 2 years while it was going on. But what we did was we took an opportunity to crystallize some of the gains we had made, right, by coming into a company that was valued at $12 million to coming out of a company that was valued at $1 billion.
That's amazing.
Right. So basically, that's what we did. We did sell some of our stake to private equity and took some chips off the table.
That's amazing. And it speaks to early conviction and strong execution. But I think what is so interesting about that is a liquidity event happened, but it was a private secondary thing. Correct. But in more developed markets, like you said, there'll be exits like acquisitions, IPOs, structured, exits. But in this market, that is still evolving.
Correct.
Which is interesting because if we use Money Points as an example, it's Nigerians that drive the transaction volumes, it's Nigerians that drive the valuations and all of that, but they don't get to participate in the upside. So why are we seeing more VCs saying, let's list on the stock market? Why are we seeing more public market exits so that we have more retail participation?
This is a very interesting question, and you have to take it with, it's complex, but you have to take it with some context, right? So let me break it down as best as I can. I think, so we invest in about 12 or 13 African markets, right? Kenya, Mauritius, Egypt, Morocco, like that. And so you can kind of common size Nigeria with some of these markets and then common size it with the US market where we're actually domiciled, right? First of all, I think a speaker said it before, there's low participation of Nigerians in our capital markets, first of all. That can be due to, low propensity to save because it comes with that, and which leads to just general level of disposable income. But the other thing also is, and let's talk about the market, then we'll talk about the companies. The market also might just not be deep enough, right? Flutterwave's last valuation, for example, was $3 billion. The whole Nigerian stock exchange is about maybe 86 billion to $100 billion, right? So Flutterwave alone, if they were going to go public, they would take between 3 and 5% of the whole market, right? And that's 100 million. About 10 of the companies on top control about 50% of the whole market. Zenith, GT Bank, BOA, Dangote. So what's left is about 50 billion. So if you put Flutterwave in that bucket, now you're talking 5 to 10% of the whole market. And we need maybe 10 unicorns? So you're seeing the math. And BOA, Dangote, and maybe MTN are already about 30% of the market. So by the time you see the liquidity in that market, it might not be deep enough for a company like Flutterwave, and OPay, a Money Point, and InterSwitch to all exist on that market. It's not deep enough.
I disagree. I think that's one way of looking at it.
Well,
but
I was going to the other side, right?
Because if you think about what you said, first of all, the NGX is at 140 trillion
Naira.
this quarter. Yeah.
Yeah,
That is substantial. That's substantial for an emerging market. That's one thing. Its return, all share index returned about 51% in 2025. And right now, the big conversation is around things like Dangote refinery listing and possibly doing a Pan-African IPO. And what it gets me thinking about is, if we get this excited about a Dangote refinery listing, it's because we see the potential. It's petrol that we use every day, and we would like ownership of that sort of industrial asset. But if we bring it down a bit and we start thinking, what about growth companies that might not be as big as Dangote refinery? What if we had another exchange where they could list, right, things like Ebano? Nigerians like familiarity. They like to be part of the story. You go to an Ebano, you use their, you're their customer, you see that cash is going in and out. If I come and sell you that as a security, it's believable, right? If we start thinking from the buy Nigerian to grow Nigeria like aspect, and we take growth companies like Ebano, and we say, right now they've grown over the years because they've used retained earnings and bank debts. What does that look like if they're able to raise long-term capital in the public markets and Nigerians can participate in that ownership? I think that yes, retail participation is low, but imagine if all those kind of companies start listing, how much bigger the markets would be, so that Nigerians own the things that they're actually consuming.
You've made a good point. More than one truth can coexist, right? And what you've spoken about anecdotally makes sense, right? And that's why I was driving from the numbers, right? Ebano, just looking at the business, right? It's probably a $10, $20 million business, right? Just trading multiples. And that's where I was going to also about how fintechs are valued against how a company like Dangote or banks will be valued. And the source lies in one, the growth rate, and either the revenue multiple or the EBITDA multiple, right? A lot of fintechs are a lot more capital efficient and are growing much faster. So let me give you an example. Yes, you do need, when investment bankers are creating a book, you need companies that have strong reputation. So a company like MoneyPoint now, because of where they sit, might be able to attract capital on the capital market. But we are not looking for outliers. We are trying to basically boil the ocean, create a lot more participation where companies like Ebano can go public, right? And the thing is, if I go outside Victoria Island, like Ikoyi, that's where the real Nigeria starts, right? And you need this kind of reputation as a household name to go public in Nigeria. And the other thing that I wanted to talk about initially is the kinds of valuations that we go public with. The average earnings to enterprise value of banks in Nigeria is about 1.3 to 1.6x of the revenue, right? And the average growth rate of a bank in Nigeria is in the single digits, 5 to maybe 10%, right? And that's why the enterprise value is so low. In MoneyPoint and OPay, these guys are growing 100% per year. The market is not going to pay the valuation that they want, right? So you are not going to come and value me at 1.5x of my revenue when by mid-year, I would have caught up with that in revenue alone. If you understand what I'm trying to say. So I'm growing at 100%, you're growing at 10%. You're valued at 1.5x. I want to come to the market and be valued at 5, 6x because in 2 years, my revenue would probably be 3x of what I'm doing today, unlike GT Bank or Zenith Bank. And my EBITDA margin is probably around 56% compared to the best in the industry is like GT Bank, that is between 25 and 45, right? So I'm speaking in the numbers that the investment bankers take into the models to go public. These are the structural misalignments, right? That are affecting some of these things. But for companies like Ebano, I absolutely agree with you. We should be able to create a way where we can get 30 billion naira to buy stock of.
You're really looking at Nigerian companies and our exchange with small eye. You really are. Because Q1 alone, right? ASI has done capital gains of 29 trillion. You did an exit. It's $8 million. You can easily find liquidity in the Nigerian market for $8 million. So where I hear you, where the market isn't deep enough and we have liquidity issues, I think it's something that can be fixed if we want a long-term growth. If we're really invested in the economic growth of our country, we need to start encouraging like retail participation. And it will come from forward thinking of saying, what's the market infrastructure that can be put in place to allow these things happen? So for example, as a VC, yes, you have a money point and that's fantastic. But you also have other companies in your portfolio that probably need exits. So imagine if there was a market, an exchange where all the VCs that have given money to companies in Nigeria, bring some of your portfolio companies and say, listen, let's list it. It helps you with something. It helps you with price discovery. It helps you to build stories around those portfolio companies that you've built and start making them even more familiar to the Nigerian public. And even if you're looking at it from a point of view of international investors, I think that this strategy could actually help, because right now you're investing in things and it's a bit opaque, right? And an international investor, when there's price discovery, if there was like a private capital markets index that was saying, these are the companies, this is what they're trading at, these are the valuation, that price discovery and that market data becomes even more important to you. So it's all well and good for us to be forward thinking about investing in the companies we want to grow. But I think the next phase of fintech, the next phase of market infrastructure, we have to start thinking about how we use fintech, as a distribution platform to democratize that ownership. Because that's one thing you guys have gotten right. The fintech companies have built distribution, but they haven't built ownership at scale. So we can say that we've digitized money, but we've not digitized ownership.
Again, as I said, right, two truths can exist. I do agree, and I like to take the optimist view that, let's think about how we can fix it, right? I'm sure you brought me here to tell you the state of play, right? If not, I'll just give you my job there. You got to do it. But as a fund that invests, we did have another exit out the money point. And this was a US company. And so as a fund that invests all around Africa and even globally, right? I think the first step to being able to fix the problem is understanding the state of play and understanding the mindset and the incentives of the people who can make this happen, right? I'm exposing the incentive and the thinking of a VC like me. And don't forget that there probably are 10 of us now on the cap table of a company like MoneyPoint or Flutterwave. My first investment in Nigeria was in Paystack, which we exited to Stripe. And I can tell you, now I can disclose, at that time, the revenue of Paystack was lower than $30 million a year, right? That exit was done at $200 million. There's no exit on the Nigerian Stock Exchange that would pay you 9x revenue, right? None. What you see today is like, if you're you get 2x or 3x. And so these are the incentives that if we want to take this optimistic view, we need to kind of educate the market to say that you don't just look at EBITDA to enterprise value. You need to look at things like strategic synergies. You need to look at growth rates. You need to look at the competitive environment, right? These are the things that make winning formulas. People like Uber went public, right? Loss-making in another market. That can never happen here, right? But the investors who invested in Uber were visionary, but they did make money from the public market. So I think there's an education piece that needs to happen, because the private investors who are going to take these things to the public market and the public investors have to align, right? We did invest in a company in Kenya called Ndovu. They're a platform that does capital market education and allows Kenyans to participate in the Kenyan Stock Exchange as retail investors. There's some companies like that here. So I think we need to understand where we are and then build from there. and the misalignment in valuations is a very strong question that we do need to answer. And I think there's an education gap.
Fantastic. I guess when we ask the question, who owns Africa's fintech boom, the answer is a group of very small investors and institutional capital. So we really need to start working on how we can improve the retail participation so that we can grow at scale. Thank you so much, guys. Are there any questions?
We're taking one question, please. Do you have any questions? You came ready. All right. Okay.
All right, thank you. I wanted to ask the question the other times, but I think it also fits in here. So, as a finance person, I am an ACC chartered accountant. So, my curiosity and interest in fintech and maybe blockchain, artificial intelligence, how these interplay, has made me to always constantly want to learn more. So I don't know much, but I'm just looking at it that, when it comes to world economy, whatever US does, in a way, it gives direction of how the rest of the world move, if you want to view it that way. So I'm looking at with respect to, I think there's this act or bill ongoing in the US, Clarity Act. So I just want to say, in the context of what we are doing now, if such bills is eventually
Sorry, can you say the bill again?
Clarity Act, I think, is around crypto and other digital assets. So if something like that is passed, what impact will it have around the world and vis-a-vis what we are discussing here? Thank you. I hope my question is clear.
Yes, your question is clear. Unfortunately, I don't know what the Clarity Act is, right? But I might be able to speak to the policy kind of waterfall. I usually like to stay out of government commentaries and government business because I have very strong opinions. But yes, I do agree with you that things like the Jobs Act that we used to develop, like venture capital and the relationship between VCs, a bunch of those things have trickled down here. We're seeing people investing with safe instruments and those kind of things. I think, yes, it will trickle down. A lot of times, probably 70 or 80% of it is usually beneficial for us to adopt. But I think the thinkers in our own economies need to stand up. Our economies are very different from the US. As you can see, the US doesn't always make correct decisions, right? So we can no longer rely on other people to make policy decisions for us. Unfortunately, we haven't woken up yet. But I do believe 70% of what you see, especially around AI adoption, will be helpful for us. The thinkers in our own communities need to stand up and do the remaining 30%.
Okay, a round of applause for Mr. Oyonion. And also another round of applause for Arese Ugu. Yes, please, can you just take a pause for the photo op session? Can we have the photographers just do that very quickly? Right. So much talk about money, the economy, ASI, DSI, EBITDA. I was just Googling throughout the whole session. Thank you very much. A round of applause for our speakers one last time. Thank you for sharing from the depth of knowledge that you both possess. I hope builders in the house were paying rapt attention to this particular session so that we, Capital, will know where next to put their money. for a firm to name themselves We Capital, which means Yes Capital, there's a lot of where that money came from. So founders in the house, pay attention. Moving very quickly to another fireside chat session, because today we said we're going to be hearing from the change makers, the policy makers, the industry builders, the institutions and individuals that are powering the fintech ecosystem. So we brought some of the big names. Have you all been having a good time? Have you all been having a good time? Have you been having a good time? I was looking for who will say no so that you come up here and share from the well of your own knowledge. Now, very quickly, our next fireside chat session, we are privileged, let me correct myself very quickly, to have one of the pioneers in building the infrastructure in which the fintech ecosystem thrives on. The Vice President and the Head West Africa for Visa, Mr. Andrew Uaboy. A round of applause for him. Make that better, make that better. I don't have to encourage you. Thank you, sir. Andrew Uaboy serves as the Cluster Country Manager for Visa West Africa. In his role, he spearheads portfolio management across the region and fosters relationships with clients, partners, and government in line with Visa's global strategies. Before he was appointed the Cluster Country Manager for West Africa, he had spent over 7 years at Visa, holding several roles, and most recently led the firm's operations in Nigeria as the country manager, where he drove the rapid expansion of the business and the growth of the company's presence in the market. He holds a bachelor's degree from the University of Ibadan and certifications in a broad range of areas, including retail banking, business negotiations, among others. Ladies and gentlemen, Andrew Uaboy from Visa. A round of applause for him. Moderating this session, our very own from Business Day, Mrs. Lily Adinife, Executive Director, BusinessDay Foundation. A round of applause for her. Lily is the Executive Director of BusinessDay Foundation, where she leads the design and delivery of programs that expand economic inclusion, strengthen ecosystems, and unlock sustainable development in Nigeria. Bringing over 15 years of experience across media, business, and social innovation, she collaborates with cross-sector institutions to shape equitable opportunities and build institutions that endure. Her work centers on driving system-level change that redefines access and outcomes for undeserved communities. Ladies and gentlemen, Lily Adenife, Executive Director, BusinessDay Foundation. A round of applause for her. So for the next 15 minutes and with 5 minutes added for questions and answers, this fireside chat is going to blow our minds away. Are you all ready for this? Okay, Lily, the ball is in your court. Thank you.
All right. Thank you so much. Good afternoon to everyone who's joined us today. I do know about explosive, but I know it's going to be a really good session. Andrew, thank you for joining us. I know that Visa is one of the few institutions that has really not just participated, but then evolved global commerce over the years, and it's underwritten it. So for decades, Visa has served as an infrastructure layer that made trust, scale, and interoperability possible across markets that otherwise would not have been able to transact seamlessly. Now, from the conversations we've had today, I think one thing is clear, that Africa is not a passive participant in that global system that we speak about. So historically, Visa's model has been elegantly simple, right? It's enabled the ecosystems through financial institutions, building the wheels and scaling. But the architecture of money is shifting. And in many cases, transactions are happening entirely outside of traditional card frameworks. So as we begin, I'd like to ask, as financial systems shift towards real-time and embedded finance, how is Visa redefining its role in Africa?
Thank you very much for having me. Happy to be here. So yes, Visa has traditionally been known and recognized as a card payment company, but that is evolving, that is changing. We see ourselves more as a fintech or as a technology provider. So if you look at the way Visa now operates, we still run our traditional card model that has seen us have over 5 billion cards across the world. But increasingly, we are investing in new forms of payment and money movement. We have capabilities that support movement of funds from person to person across borders. We also have solutions that support business to business funds movement. A quick example is AfriX. Some of you would have known, you will know about AfriX. It's a fintech company that caters to African diaspora outside of the continent. They leverage a Visa product called Visa Connect to push money across West Africa from the different parts of the world. So that's one of the ways that Visa is building its solutions beyond the traditional card payments that we're typically known for. There are also other use cases. If you look at, for example, DRC, that's the Democratic Republic of Congo. Visa has taken the opportunity to build its own app that is driving commerce from person to merchant, merchant to person, and person to persons. That app relies on the movement of funds, not just into accounts, but into wallets. Just to give you a view of how we are moving beyond our traditional model of card payments. If I can even take it a step further, if you look at movement of funds business to business, we have Nigerian banks operating in different parts of Africa that need to move money from one location to another, obviously business-related flows, which typically would have gone through SWIFT, but these businesses have used the Visa solutions called B2B to connect to move funds across the globe. So basically, to answer the question you've asked, is we are moving beyond the traditional model of card payments. If I can take it into the embedded finance piece, a lot of us have many apps that we use, whether on social commerce or ride hailing or different app solutions. Those solutions typically by themselves in their native feature do not come with payment capabilities. It is the Visa rails that enables the completion of payment when you want to book a ride or you want to make a payment. So those are the ways that we are helping and building payments beyond our traditional business model.
Thank you. Please, a round of applause. Let's be generous. Okay, one of the keynotes touched on partnership and competition briefly, and I want to bring that here again. We see that, African markets are increasingly building solutions that are addressing cost efficiency, data ownership, and long-term economic positioning. So how does Visa position itself as a partner rather than a competitor in this evolution?
So we're seeing a lot of development and innovation happening in the payments ecosystem within Africa, and we absolutely love it. We absolutely support it. One of the ways that we support it is if you look at what we do through what we call our Visa Fintech Accelerator Program. What it does is it helps fintechs, startups, to come into regional and global view. Since we started that program a few years ago, we've had the opportunity to get about 104 fintechs run through that programs, and the valuation of those 104 fintechs is well over $1 billion today. But beyond that, we also support what is a lot of what the development happening in Africa, because we believe that for payments or for technology to scale, it cannot work in silos. So what Visa does is that it brings the best of the different solutions that people have built, whether it's on wallets, whether it's on instant transfer, whether it's on card or any other platform, and we bring that interoperable option for those solutions. What that does is that you can use that solution whether you're in Nigeria or you're in Kenya or you're in Niger. So it brings that interoperable solution for you. Thirdly, beyond that, it also helps bring trust. Somebody earlier was speaking about a trust brand. Imagine you've worked with a fintech or a solution provider and you see the Visa logo or the Visa sign. That gives it credibility, knowing that Visa has certified this product, and you know that anywhere in the world that you can go, you can pay or be paid using that solution. So we do support and encourage, all of the work and development that's happening within the Africa landscape.
Thank you. Okay, so let's come to trade and cross-border payments. We know that Africa has a lot of potential, and if there's one area that there's a big gap, really, it's in cross-border payments, because without trade, there's no real, thriving economy, and there are layered constraints for trade. There's regulatory fragmentation, there's exchange limitations, there's interoperability between systems, and then the big question of trust and security. So there's rapid innovation, but then core infrastructure that enables that to scale across markets is still under some pressure. So my question is, what structural changes, whether regulatory, technological, or behavioral, must happen for Africa to achieve truly seamless cross-border payments?
I think the first thing that needs to happen is ownership. Ownership from the regulatory or from a government standpoint, and particularly also large corporate organizations. So they need to start to do, or what I say, practice what you preach. The more the governments, the more large corporates begin to utilize some of these solutions. For example, if a government wants to do disbursement, rather than having people line up in a place to collect cash, they digitize that payment. If a government official is traveling for a conference, wherever, rather than disbursing ESTA code or per diem, they digitize it and it can be tracked where and how this person can use it. If a large corporate organization wants to move money to employees or whatever form, and they digitize it. I think when these large corporate organizations as well as governments start to embrace digital solutions, then consumers start to use it as well, because imagine you need to pay your taxes digitally, you need to pay some of your statutory fines or fees digitally. That brings or enables people to do that. On top of that, there's a need for governments across Africa to start to streamline processes as it relates to licensing, as it relates to also capital flows, as it also relates to ensuring that people get the right KYC documentation in place. All of these things are contributory factors in why cross-border flows do not move as they should, because usually the technology exists. Technology is not the problem. It's the operational and policy aspect that actually hinders a lot of these things.
Absolutely. And I was just thinking that there's such a large burden placed on the government and then big organizations. But we know that, there's so many other fragments, whether you think on the community level, how do we also, ensure that this technology that's available now reaches and scales on that level too, so that everybody's able to participate or partake in access?
Again, it goes back to what I said in the previous question. It's, the trust. Trust is plays a fundamental role in how people accept new solutions or technology. And as we build trust with solutions, the last speaker was talking about MoneyPoint. Interestingly, Visa has also invested in MoneyPoint. That again goes to the issue of trust. When a brand like a Visa is putting money in an entity like that, begins to show how people demonstrate the trust in such solutions. So it's also identifying players, opportunities, solutions that can penetrate that landscape. And when you have a brand like ours supporting, then it gives that confidence and trust for the end user.
All right, thank you for that. I'd like to say that we will be taking some questions in a few minutes as we round up this panel. So please have your questions ready. Okay, so my next question is on the future of money movement, right? There's this great deal of optimism about Africa's payment future, and rightly so. But beyond projections and growth narratives, the more important question is who actually becomes dominant at scale. Because growth alone does not answer that question. It's structure, structure, and structure. So looking forward, what does the future of money movement in Africa look like? And what role will Visa realistically play in shaping it?
When I think about the future of African payments, I'll describe it under three themes. Hybrid. Now, what do I mean by hybrid? You see dominance of different payment form factors across Africa. In some markets like Nigeria, you see RTP, what we know as instant transfer, real-time payments, dominating. In other markets, you see wallets, what they know as Momo, dominating. In other markets, there are other form factors that still dominate there. So the hybrid model would be where there is a convolution of RTP, mobile wallets, digital assets, and all these other form factors coming together in an interoperable way. So someone that is coming from Mozambique and is coming to Nigeria, but it's only mobile money that they use in Mozambique will be able to transact here. Or someone that is coming from Egypt and going to East Africa is able to transact. So it's the convergence of all of these form factors in a manner that they are able to operate interoperably. And how do we, another thing that also, what I see happening is there's a lot of, like I mentioned earlier, a lot of siloed development happening in Africa. Strong brands, again, like Visa, coming to give them scale because you have a small player that's built something really nice in a small part of Africa. The Visa comes and invests or gives it, like I talked about the Visa Accelerator program where startups come and demonstrate some of the beautiful things that they are building. Bringing all of these players together helps them to big scale because you are designing something locally, but because of expertise and knowledge and investment, you can take it globally or regionally. So Africa payments ecosystem will continue to grow and evolve, and the way Visa is going to support, similar to what I mentioned earlier, is that we are going to be bringing visibility, those solutions that really cut the mark and are ready to move globally. We'll also be putting our stamp, which is our trust and security, which gives confidence to people anywhere in the world coming to any location and sees that. So that's how we're going to be supporting the growth of the payments ecosystem in Africa.
All right, thank you so much. Please, a round of applause. I think at this time we can take a few questions from the audience. Do we have any questions? Okay, I see a hand up at the back. Okay, 2, 3.
Okay.
4. Okay, I think we'll stop at probably.
So where do we start
So
from?
we can take just 2 questions.
2 questions.
All right.
Okay.
Person closest to you, I think, was the first hand I saw up on that section.
Yeah. Okay.
All right. Good afternoon, everyone. My name is Israel Beshagara. I'm a chartered banker. I work with Access Bank currently. So my question is, from what the speaker said, so concerning the future of payment system. So for me, I am of this opinion that, of course, the payment system in Africa or the world, of course, is evolving. And if you take a look at it from where it's actually coming from the cash economy and coming to probably the mobile wallet and the real-time transaction payment system that you talked about, of course, there is something that is coming next that I feel, of course, we need to put it into consideration as well, which is payment by presence. And if you take a look at it very well, of course, this initiative has been actually vetted by some people, but there are some security concerns to that. There's payment by presence, where of course you can actually step into a location. Okay, all right. So payment by presence. So what I want to ask is, are there any measures put in place by Visa to support payment by presence in the next future? Thank you.
Right. Thank you. Okay. Next question. Okay. So we have a dilemma here. We have a guy and a lady.
Okay. Let's make it get up.
Good afternoon. For a fintech company too. So my question is actually for, it's for the speaker. For partnership is the number one. Second question will be, what?
I'm sorry to interrupt you, but I don't think we heard the first question. Could you try again?
Is Visa open to partnership? Visa.
Sorry, I didn't get the second question. The benefits of what?
The benefits of partnership with Visa.
Okay, got it. Okay, I think maybe I'll start with the second question and I go to the first one. The benefits of first off, yes, of course, we do partner with fintechs, and we've partnered with a number of entities that have demonstrated ability to provide skill. I talked earlier about the Visa Accelerator Program, where we've supported over 104 fintechs and startups. And those startups and fintechs, if you could, their combined value is well over $1 billion. I think over $1.4 billion today. So that's a demonstration that yes, we are open to partner with fintechs. In terms of the value that they get, obviously the Visa brand brings you skill, it brings you knowledge, it brings you expertise, and it brings you visibility. Some of you might be aware of Thrive Agric. It's one of the fintechs that have went through our program, and it was one of the winners of our Visa Everywhere initiatives and won a significant amount of money. There's also another fintech called Drugstock, right, that also won the regional finals. So the point I'm making is that partnership also brings you visibility that you can use as a credibility to grow your business. So I hope that answers your two questions. On the other question around emerging payment platforms or emerging form factors for payment, I can assure you that Visa invests a significant amount of money in ensuring that fraud detection and anything related to risk is taken into account before a new payment form factor is introduced. You probably would have heard about agentic commerce. That is the next place that we believe that commerce, the future of commerce, is heading. A number of people here have talked about AI and what AI does. The way we are heading, or the way we see the world heading, is that your AI will be able to do transactions on your behalf. They will be able to pay your subscriptions, book hotels, book flights. So to summarize my response to your answer, yes, we do have programs and ways that we future-proof and risk-proof payment form factors. Thank you.
All right.
Thank you so much.
The first question, did you do justice to the first question? Okay.
Yeah.
So yes, that's
all right. No more questions. Thank you.
That's all. Right, ladies and gentlemen, there you have it. Our fireside chat has just been concluded. Mr. Andrew Uraboy and Mrs. Lily Adenife, please, can you just stand for a photo op? But photographers, just one moment. We would like to invite on stage for this photo op Ibukun Humphrey from OPE. Round of applause as he makes his way to the stage. Emanuela Eder from Team Act. Please put your hands together for her. Blessing Erize, the CTO at FCMB. Mr. Blessing Erize. Just one moment, photographers, please. Dotun Daniel Adekunle, the Chief Operating Officer and Chief Technology Officer at OPay. Please put your hands together as he comes to the stage. From Pratt Nova, Ambassador Dr. Benjamin Oyemaran. Please put your hands together for him as he makes his way to the stage. Ifeoluwa Akimbodi from Oxygen X. Please put your hands together for Ifeoluwa Akimbodi from Oxygen X. We also have the country manager Visa West Africa, Damola Gira. Can we have Damola Gira on stage? And last but not the least, our very own from Business Day, our ED, Ijoma Ude. Please put your hands together as she makes her way to the stage. This is going to be our front page picture. So photographers, do justice. Make sure you get all the right angles of the ladies. And maybe you can try for the men. Okay. Gotten some good shots? All right, thank you. A round of applause for our panelists, our speakers, and all our sponsors on stage. Thank you very much. A round of applause for them now, please. Thank you. Thank you. Such an insightful session, enlightening day. We're learning all about the infrastructure, the structure, the architecture, models, and systems that power the fintech ecosystem in Nigeria. Really, really innovative. Now, we can never get enough of OPay. We can never get enough of OPay. Can we get enough of OPay? Can we get enough of OPay? Exactly, we can never get enough of OPay in Nigeria. They power major transactions that happen in everyday situations. When you're getting out of the Uber, you want to pay, you use OPay. When you go to mom and pop shop, you want to just grab a few things, you use OPay. When you even go to the big shops, or when you go for dinner at Silk Lagos or one of these fancy places, most of the time you want to pay with your OPay, and most of the time the waitresses and the waiters, they want to collect the money of the company in their OPay. So because we can't get enough of OPay, we'll be inviting once more on stage the Chief Operating Officer and the Chief Technology Officer of OPay, Mr. Dotun Daniel Adekunle. Please put your hands together for him. He's going to be giving a keynote presentation. But before he does justice to that, I would like to read his bio. Dotun is a seasoned fintech and technology leader with over 20 years of cross-continental experience in payments, financial technology, and enterprise systems. He currently serves as Chief Operating Officer and Chief Technology Officer at OPay. Since his appointment in July 2024, he has overseen the integration of robust operational processes with a forward-looking technology strategy. He holds an MBA from the University of Roehampton, a postgraduate diploma in artificial intelligence and machine learning from the McCombs School of Business at the University of Texas, and a diploma from the great Yaba College of Technology. His academic and leadership credentials reinforce his influence in shaping Africa's fintech landscape. Ladies and gentlemen, CTO and CEO at OPay, Dotun Daniel. A round of applause for him. A privilege, sir.
Good afternoon, everyone. Really my privilege and honor to be here this afternoon. I trust that you've had very engaging sessions already. I believe that a whole lot has been said. The very theme of the conference today shows that there's a lot of thinking, a lot of research has been done. So I'll just say a few things that can help us to take the the future forward, basically. So all protocols observed. I've seen a lot of friends and colleagues across the industry. You're all a very good afternoon to every one of you. And thank you for having me. Business Day, thank you for having me here today. Okay, this goes forward, backward, right? Where do I point to? This way? Okay, cool. All right. I want to start by saying that the problem of payments is solved. The next frontier is very different. It is going to be about intelligence. It is going to be about infrastructure. And it is going to be about true inclusion. Let me tell you how I know this. Basically, Nigeria's NIP platform, for instance, has gone from hundreds of thousands of transactions monthly. I was there when the early days, the early integrations were done. And we knew how paltry the volume of transactions were. As at the end of 2024, between NIP and the POS infrastructure at NIBS, over 1.07 quadrillion in value of transactions had passed through the electronic payment systems in Nigeria. As at 2020, Nigeria did about 200 trillion naira in terms of volume of electronic payments transaction, and 2024 was over 1 quadrillion. That shows that payments grew 5x in 5 years in Nigeria. OPay is not also excluded from this payment growth that we see in Nigeria. Today, we process over 150 million transactions on a daily basis and 4.5 billion transactions on a monthly basis. We're not the only ones, so it's not as if I'm singing the praises of OPay. We're not the only ones. The banks and the fintechs and the brothers across the industry are all part of this success story of payments in Nigeria. So the question is, if payments are already solved, what then is the reason why we are still talking about payments in Nigeria and in Africa in 2026? This is something that no one would like to tell you. And I say this as someone who has built the payment rails. I know what it is. I know what it cost. I know how much effort went into the payment systems that we enjoy in Nigeria today. And I can say without a doubt that many of us are not fintech companies. We are just payment providers. And we need to transit beyond just being payment companies into real fintech providers across the ecosystem. What everybody is focused on is payments. And if you focus only on payments, we're only pretending to be fintechs. Sometimes, I think yesterday night I was just flashing through my OPay app and just looking at the list of potential destinations when you want to do a transfer. And some funny names just came up. And this is not to castigate anyone. But I saw Lawyers MFB. I saw Adewale MFB. There were just so many funny names that have been connected to the Nigerian payment system. And the question I ask is that, do we need another one? From time to time, you get calls from NIBS. There's a new payment partner that you have to integrate to. And then you have this long list of integrations that are needless, that are not really needed, because everybody today is just copying and pasting what has already been done by somebody else and putting it and offering it on the market. And they're not saying, I have this small niche. I was speaking to somebody the other day, and they said, look, if I have just 10,000 users, the transactions that they're doing is fine enough for me. At least I own my own niche space, and those 10,000 users are my users. And we're wondering, is it necessary if there are other players that have already accomplished that much? Why should we be copying and pasting what is already done? There are still many areas that have been left untouched, and those areas need to be addressed. I know this because I've seen it and I've felt it. So if not payments, what are we actually measuring? Let me show you. If you look at most of us who are payments or fintech companies in quote today, if you look at our board decks when we are presenting to our board members, what you will find will be things on the left-hand side. That's the story that we have to tell. Our transaction volumes, how much data, how much volume that we have transacted on. What we'll see is the new rails that we have built, the new features that we have put on the app. What we'll see, the number of users that we have onboarded. What we'll see is the number of payments that we process, and perhaps the number of app downloads that we have. But that does not tell the true story of what inclusion should be about. I think that we talk about inclusion a lot in Nigeria, but we're not telling the story and moving it towards where it really ought to be. What should we be focused on instead? Look at the themes on the right. If we have true inclusion, what we should be measuring on our board decks should be financial progress per user. How many of us can depict how a user onboarded on your app at this point in time, and this was his financial performance, this was where he was, these were the transactions he was doing, this was the total income, this was the total expenditure, this was the total savings, and then the person has moved, and you can now say that via my app is able to do much more, is a much better person financially, and there is financial progression in the life of that person. The goal of inclusion is not access. The goal of inclusion is economic prosperity. That's where we need to get to. That's what we need to measure, and we need to make that change as quickly as possible. How many of us measure decision systems that have been built? How many of us measure the users that are actually empowered, that they have a difference? I was saying within OPay that each time that we do a transfer on OPay, that what you are really transferring is not money that is moving from person to person. What you are really transferring is value. What you are transferring is education. What you are transferring is health, paid across board. What you are transferring is love, because you are showing that you care for someone at the other end of the line. These are the impact and metrics of impact that we should really measure, and not just the volume of transactions and the number of app downloads that we should have. What we should have should be these things instead. That brings me to where we're really going. Intelligence, infrastructure, and inclusion. We have to look at a future in which intelligence and infrastructure come together to profile to the common man on the street real financial inclusion. Without intelligence and infrastructure coming together, what we have is something else. Because inclusion without intelligence is a risk, a big risk. And without infrastructure, it is extreme fragility. But together, with intelligence and instruction and infrastructure, what we have is a real opportunity to make a difference. Let me show you what I mean on this. I'll go to the first thing. We know that today, intelligence is the missing bit, but we'll talk about that later. But when we look at infrastructure, yes, and I listened to Andrew mentioning some things around that. Yes, when we look at infrastructure, the infrastructure exists to a certain degree. To a certain degree, we know the progress that I mentioned even earlier in my opening about NIP and the volumes that have been processed. We see that the rails exist, but the rails are still not optimized. There's always a challenge. Yes, there have been lots of progress, but there's always a challenge. Every time in December, your ad goes up, because that's during dirty December, you are afraid that transactions will begin to fail. When you still get to the last day of the month, when salaries are being paid across Nigeria, you begin to have that transactions start getting slow. The higher rates of failure begins to multiply and begin to increase. Believe you me, with the volume of transactions that we do at OPay, we're able to see this almost in a real-time basis. If a bank A is having a problem, in 5 minutes, we already are aware that that bank has a problem. In fact, one of the things that has been my grouse with industry colleagues has been that on the OPay app, many times when transactions to a particular bank have started to fail, we immediately label it and tell our users that, look, your transaction to bank X or to wallet A may begin to fail. It's not stable at the moment. And immediately that happens, I get a call from a CIO or from a CTO of a bank or a wallet company, and it's saying, Doctor, remove that thing, remove that thing, remove that thing. That's you're maligning our organization. You are doing something that is bad. And every time I'll fault them, I'll say, your problem is not OPay that put that thing. It's not a market, it's not a demarketing in any way. The thing that you should look at is that you need to improve your systems. And what we are seeing today is that I'm not having as much of those calls as we used to have before, because it means that everybody has improved their level of availability, their level of uptime, the performance of their systems. Is everybody going up in the same direction? There has been improvement, but we still need to go one step further to make that payments happening across the ecosystem is solid. We have millions of users at OPay. Every day, transactions within our ecosystem, of course, they are closed loop, and then there are no failures. The problem that we always have is where we have to go, transactions have to go across systems. And that is the headache that our customer service. And where the payment even fails, or there's a dispute around that payment, that's where the mega challenge is, because there is no guarantee of how you can get redress as quickly as possible. These are the challenges that we have in our ecosystem. That's why I said to us that the infrastructure has moved, it has improved, but I think there's still a lot of gaps that needs to be fulfilled, that needs to be solved, that needs to be resolved. How do we have the infrastructure being able to address disputes as fast as transactions are going? There are many gaps that still need to be resolved. So infrastructure, yes, it exists, but then it can do better than it is doing today. We still have struggles with cross-border payments. I was speaking with a partner earlier this week, and we had done some pilot about some cross-border payments. And what we normally have, in fact, Nigeria is good, because that's what I got from that meeting. Nigeria is good because we did some payments and everything happened very fast on our side. And then we're saying that, oh, this thing is delayed. And the partner had to tell me, excuse me, I know you are from Nigeria. You know, you people, your payments happens in 2 seconds. He said, but in these other parts of Africa, the payments doesn't happen in 2 seconds. So if you get 20 seconds, it's wonderful. So why don't have, he said, I'm trying to manage your expectations so that you don't come with this feeling that something is not working. Just know that things are not where it ought to be. So for me, I think that infrastructure, not just in Nigeria, but across Africa, there's still a great deal of work that needs to be done on that. But above and beyond infrastructure is the amount of work that needs to be done on the intelligence layer, which is completely missing today. Let's look at that intelligence layer. Why today are we still rejecting customers from accessing credit, for instance, when we already have all the data concerning those customers? We know who they are. We have their digital footprint. We understand who they are. We know the patterns of their lives. I mean, imagine a customer who is on a popular telco. You know where he resides. You have data concerning where he lives, where he works. You know the amount of data he buys and he purchases per month. You know the amount of airtime he purchases. You know who he calls. You have all that data. Now imagine the card systems or the card schemes. I'm happy Visa is here. You know where they spend money. You know who goes clubbing. You know who goes gambling. You have all that data about the person, about the individual. Nothing is hidden, really. So I'm sure some of you are rethinking. They know everything. And then you have the wallet systems like OPay and the rest. And we know where you are spending your money. We know the transfers. We know where you are going to. We have all that data. But if that data is not converged together and used to bring out insights so that you can use the intelligence to offer products and services to the user, then we are doing the user a disservice, because we are not taking advantage of everything that we have been empowered empowered with. So that's why I say that the intelligence layer today in Africa is completely missing. Every behavioral data is really a credit file. That's what it is. Every transaction is really a data point. Each time somebody uses that card on a point of sale, it's a data point. It tells you something about the individual. It tells you something about what his needs are. It tells you it's a big story. It's a real story point. I was watching a movie some days ago, and in the movie, somebody mentioned that hotel maids are really powerful. And I was eager to hear, what are you saying about hotel maids are really powerful? He said for the top hotels, a real hotel maid, an intelligent hotel maid, knows everything, can enter a room and look at that room when she's about to clean it and know everything about the profile of the person of the client that was on board, that stayed in that room. They can tell you his personality. They can tell you his preferences. They said they harbor so much information about individuals. Imagine if a hotel maid is that powerful. That means your POS is very powerful. That means your payment app is very powerful. That means your card system is very powerful because you have so much information about the individual, his preferences, his needs, and you have it over time. That's where we need to get to. Today, fraudsters are already using AI. We know some of the things that are about to be released that they are telling the big players to prepare for. Fraudsters are already using AI. If we, in our payment systems, are not using AI, leveraging this power, then we are really in trouble and we are doing the whole market a disservice. Now, there's something that we have built at OPay to look at the state of fintechs. That's why I said a lot of fintechs are not fintechs. They are actually payment companies. We've done something called a fintech maturity curve. And I want us to be able to look at this and understand which stage every company or every fintech is at. There are 4 stages that we've highlighted. The first stage is access. The second stage is activity. The third stage is understanding. And the fourth stage is optimization. This is the fintech maturity curve. At access layer, it's just about wallets and accounts. People are able to open wallets. They're able to open bank accounts. They have access. Then you go to the next layer, where is the activity. That's when payments begin to happen. That's when transactions begin to happen. That's when transfers begin to happen. That's when utility payments begin to happen. That's where card transactions begin to happen. That's where you see agents all around the street, and then you're able to use your card to access cash at those locations. That's a level of activity. What we have not gotten to in Nigeria is the level of understanding. The level of understanding is what I talked about earlier. It's about being able to use the insights from the data, from the data that we've captured about the individuals, and use that to create intelligent products, intelligent services, additional information, perhaps infer, so that we're no longer at the point where we are reactive to the customer needs, but we are proactive and telling them this is what you need based on where you have been and based on the data that we have about you. And the fourth layer, which is actually, I put it in gold. I don't know why it's showing in orange, but it happens. That gold layer actually is the level of optimization, where we have optimized everything. We can take advantage of the data. We have intelligent routing. We have intelligent payments. We have agentic commerce. We have all those kind of things in operation. That's the level that we need to get to. We are not there yet. A lot of people, a lot of fintechs today are stuck between layer 1 and layer 2. We need to at least move to layer 3 and hope for layer 4. That's where we need to be. As I close out, I thought there would be some regulators in the market, in the room. So I have some things I want to say to each one. To the regulators, I'll say to you that you are not our obstacle, but you are our most important partner. And you need to treat us as one, and we also need to treat you as collaborators so that we can make a difference in the ecosystem together. Today in Africa, there are 54 countries, but what we also have is 54 different jurisdictions. What we also have is 54 different regulations, and it makes things much more difficult. Why should I carry a wallet in Nigeria and then go to Ghana and have to change my money to another currency so I can spend? Why should I have to do the same thing when I go to Cameroon or to Kenya or to South Africa. I should be able to, with one wallet, go anywhere across the whole of Africa and should be able to spend without having to change anything. It should be seamless. There should be zero friction all across the continent, all across every country in Africa. That's where we need to be. FS constraints must be removed and all of that. To investors who may be in the room, the access layer, I've shown us the access layer, the activity layer, the understanding layer, and the optimization layer. The access layer is already commoditized. If you are going to make a difference, and if your thesis is still focused on the access layer, I'll say that you came too late. What you should be looking at is those who are in the layer of understanding or moving to the layer of optimization. To our bankers, fintechs are not your enemy, they are your partners. Those who are early collaborators with the fintechs have moved forward and have made gains. I think as we go forward, we should continue to collaborate together to see what the future likes. Fintechs cannot do it without you. Banks also cannot access the retail the way and with the efficiency that the fintechs do. To founders, the best play left is not payments. The best play left is not payment. It's the decision layer on top of payment. Go and build that. I'm not afraid of competition. Let's go and build. Let's go and build a new future. And to those who may be students who are aspiring, I'd say to you, you are the future. The informal layer in Nigeria is still 70% of the economy, and it has not been digitized the way it should be. Who is going to build that? You are going to build that. And you're going to build that not with payments, another payment app. You're going to build that with data. You're going to build that with AI. You're going to build that with something that is much better. As I round up, I say the first decade of payments and fintech in Nigeria was about access. But the next decade is no longer about access. It's about moving from access to advantage. We are moving from enabling transactions to enabling transformation. Thank you.
Another round of applause for the CTO and the COO at OP. Make that better, make that better. Powerful presentation, sir. Thank you so much for that. Okay, it's still on. Thank you so much for that powerful presentation. As always a joy to hear you speak about what you are passionate about. I know the major exploits you've done in the fintech industry, moving from place to place, and this was all too powerful. Thank you so much. A round of applause for him one more time. For the good work that OP does, banking the unbanked. All right, now they say every good thing that has a very, very nice and great start and beginning must come to an end. I'm not excited. We are going to be having our last panel session very soon. But before we go into this last panel session, is there any maybe contribution anyone would like to add, maybe just for 30 seconds? Any contribution? Okay. In the absence of none, we're still at the Business Day Fintech Summit 2026, and Business Day has a special package and a special promotion. Now, in today's environment where we have regulatory shifts, macroeconomic changes, and investment risks, staying informed is no longer just about headlines, but about access to timely, decision-ready intelligence. Now, this is where we at Business Day Premium come in. With curated insights like tipping points, HEK, and our executive briefings, Business Day Premium provides forward-looking analysis, policy signals, and market intelligence specifically designed for decision makers like you all that we have here in the room. Now, it is essentially business intelligence on the go and not just another subscription or another newspaper for you to read, because we try to help you stay ahead. We do help you stay ahead and not just informed. Now, to get started, visit the website. I want to see people writing or jotting this down. premium.businessday.ng. premium.businessday.ng. Or you can speak directly with Michael. Where's Michael? Michael? Okay. When Michael comes, I'll just signal him. And once again, that's premium.businessday.ng. www.businessday.ng. Then for those of you that wrote down, you can add /offer and you enjoy a 33% discount off the original price. This is exclusive to only event attendees. So don't tell anybody outside. It's just for you here. 33% off. So thank you, Business Day, for that. Now, just like I said, for every good thing that had a very, very great start, we are down to our final panel session. Now, panel 2 is going to touch on the subject matter beyond payments, building Africa's interoperable digital money system. The moderator for this particular panel is no other person but Ehinomen Abiele. Please put your hands together for Ehinomen. No. Really, that's for me. But put your hands together for Ehinomen. All right. She's still making her way to the stage, and she's such an elegant woman. So please do the honors of making that better. All right. Welcome. Please be careful. There's around here, so be careful. Okay. Also on this panel is Aisha Amira Adedeji. A round of applause for her. Another elegant lady in this ecosystem. She's a global private banker and wealth management specialist. Let me pull up her bio. Woo. Aisha is a global banking professional, wealth strategist, author, and financial educator with over a decade of experience helping individuals and families build, protect, and grow wealth. Her career spans multiple international financial centers, including the United Kingdom, Nigeria, South Africa, Abu Dhabi, and Saudi Arabia, where she has worked across banking, private banking, investment management, and financial strategy. She holds a degree in banking, finance, and management from Louisville University, where she also serves on the Alumni Advisory Board, supporting initiatives that strengthen engagement between the university and its global alumni network. She is the founder of Coin IQ, a Saturday financial literacy school designed to teach children and teenagers how money actually works. Ladies and gentlemen, a round of applause for Aisha Amira Adedeji. On this panel, we also have Damola Giwa, the country manager of Visa West Africa. A round of applause for him. Visa is so nice, we have to have them twice. Dami, okay. Damola Giwa, country manager, Visa West Africa. Damola is a country manager at Visa West Africa, where he leads strategic initiatives to accelerate digital payments adoption and strengthen Visa's position as a trusted partner in the region's financial ecosystem. Previously, he held senior leadership roles, including Managing Director, Digital Banking at ARM Group, where he established and led the group's fintech and digital banking subsidiary, Managing Director of Jumia Pay, West and East Africa, and Group Head, Verve Issuing and Acquiring at InterSwitch Group. Earlier in his career, Damola held leadership roles at Stanbic IBTC Bank, spearheading enterprise-wide digital transformation and enhancing customer experience. He earned a Master of Business Administration degree from the Obafemi Awolowo University, Ile-Ife, and a Bachelor of Science degree in Economics from the University of Ilorin. Ladies and gentlemen, Damola Giwa, a round of applause for him. We have Dennis Ajali. Dennis Ajali, Chief Executive Officer at Team Apps Limited, represented by Emmanuela Ede. Emanuela Ede. Please put your hands together for Emanuela Ede. She's the product delivery lead at Team Apt Limited. Right. On this panel, we have Ambassador Dr. Benjamin Oyimoran, the CEO and co-founder at Platnova Technologies Limited. A round of applause for Ambassador Dr. Benjamin Oyimoran. Benjamin is a visionary African business leader and technology entrepreneur. Driven by a passion for simplifying global financial interactions, he leads Platnova in delivering seamless payment solutions that serve users across Africa, Europe, and North America. Under his leadership, Platnova has introduced products that empower people to send, receive, save, and manage money effortlessly in multiple currencies, driving financial inclusion and supporting Africa's participation in the global economy. Ladies and gentlemen, an ECOWAS Youth Ambassador, put your hands together for Dr. Benjamin Oyimoran. Ginger, can I have Ginger? Where's Ginger, please? I will need an extra chair. We have another panelist. So while we have Ginger come and rectify that, or Mr. Desmond, please, yes. Last but not the least on our list of panelists, you saw what I did there, list. Ifeoluwa Akinbode. Please put your hands together for Ifeoluwa Akinbode. He's the head of programs at Oxygen X Finance Limited. We'll just read the profile. Ifeoluwa, no, make that better now. Make that better, please. Thank you. Ifeoluwa is an experienced client-facing programs manager, proficient in the delivery of business solutions and services for blue-chip companies across various economic sectors. With over 16 years practical knowledge in delivering and managing solutions for IT, marketing, communications, and process re-engineering, she has experience in managing technical B2B and B2C projects while applying the agile methodology to the software development lifecycle. Ifeoluwa is recognized for her ability to enhance organizational efficiency and profitability, drive strategic direction, and manage diverse teams with empathy and impact. Ladies and gentlemen, Ifeoluwa Akinbode, head of programs at Oxygen X. A round of applause for her. All right, ladies and gentlemen, there you have it, our final panel session for the day. They are going to be speaking on the topic Beyond Payments, Building Africa's Interoperable Digital Money System for the next 40 minutes. So ladies and gentlemen, get your pens and your pads and do a lot of jotting and do a lot of writing. Panelists, blow us away. Thank you.
All right, thank you so much for that. And I'd like to offer a warm welcome to everyone on this panel. When you have a panel that is curated like this with so many people from different sectors, different places, with their own custom experience to share with us, I'm always so excited, honestly, so excited. So welcome. Thank you for joining me here today, and we'll just get right into it. All right. Hi, Emanuela. I think I'm going to start with you because I don't know, there's just something about your smile. So let's just get into the details. Today, we're discussing building Africa's interoperable digital money ecosystem. I don't think there's such a thing as too much information, right? And that's what we're trying to gather today, right? So let me just start from something more personalized to your experience or your company, to be precise, right? Currently in Nigeria, we have strong payment rails. I don't think in the sector of fintech, we will say there's a hunger there's a gap that people have not yet tried to bridge, right? In fact, what we're even trying to suffer from at the moment is too much building. There's too many people building so many solutions and not enough people to use these solutions, right? So we have all these solutions, people keep building, but we still have a problem with interoperability. Yeah. Do you understand? So I want to know from your point of view, why do you think it remains fragmented like this? What do you think would be the things in between that are causing these little cracks that we see from day to day?
All right, thank you very much. So first and foremost, I want to extend the regards of the CTO. I don't know if you guys are excited to have me here. Yeah, you guys were excited for him, but well, I'm here, so you have me. All right, so you're very correct. Nigeria has a very strong payment rails. We've built a very strong payment rails, and we have the technical capacity and capabilities today. So I don't think that we're lacking in terms of technicality. I do feel like maybe the issue here might be misaligned incentives. And I say this because the policies are there, right? CBN released a fintech report recently, and within that report, it is very clear that the regulations have been put in place. I think the question is, are we adopting it, right? Are we fully implementing that? And a good example would look like the GSI framework, which means Global Standard Instruction. That has a direct impact on players in the loan credit facility space, right? But that framework was built to promote and encourage interoperability in Nigeria today. And if we're not adopting those frameworks today, what that implies is that, interoperability will be poor, and where there's poor interoperability, you're also going to face, businesses of that nature will face issues. Another perspective to look at it from is in the identity management space as well. Today, we have a lot of fragmented data in that space, right? And what we have today, what Nigeria has built as the backbone for identity management is the BVS system and the NIMC. And while those two are, together are strong, individually, it poses a problem, right? It means that data sets sit in silos. And when institutions like MoneyPoint, and generally mostly financial institutions, right, have a mandate to do KYC, to run KYC on their customers, then that becomes a problem, because what that implies is that they have to source data from two different systems, right, conjugate that data, and it is expensive because every API, you have to pay for it. So where I feel like we might be able to progress is when, and I know that is currently in the works, the regulators are already working towards, consolidating or linking, or if you want to call it linking, merging or harmonizing the data that exists within those two systems so that businesses can run efficiently, right? And the data is less fragmented. In fact, it's no longer fragmented. There's one source of truth to pull out information. And when that is there, obviously we've solved the problem, a real problem of fragmentation, data fragmentation and data sitting in silos. Because with the BVN today, what you find is that the BVN serves as a financial identity, sort of, for customers, amongst other things. But we also find that the NIMC is more of like your civil identity, right? So there's a need to have that merge between, or that link between those two data sources, right? So that businesses can thrive better.
Thank you so much for that. And I'd just like to say, Mr. Adamola, I noticed you were like very vehemently nodding, and there seems there are some things that she has touched on that you do agree with. So I think it'll be a perfect flow to just kind of come to you with some questions, because on your end, right, Visa has a payment infrastructure that is built on standardization. But she's mentioned some things about fragmented data and that disconnect and the effect that it has, right? So how are you on your end with your team? How are you adapting to these very evident issues?
All right. Good afternoon once again, everyone, and thank you for having us. I think the question is spot on, and she's spot on the issues that she has highlighted also. For global payment network like Visa, we come to markets like Nigeria, and we operate across multiple countries. And the benefits that Visa brings is that we can bring global best practice, we can bring scalability, we can bring interoperability, we can bring standardization from a rule-based and in terms of things like security, trust at scale. But we also recognize that the markets are dynamic. As everybody has said, there is a lot of fragmented players across multiple markets. So what we have done is to ensure that we can partner with local players like TMAP, MoneyPoint, OPay, and the banks, and even with regulators to ensure that payment is not just global, but it's also locally relevant. So we ensure that payment is tailored to the local environment. And one other areas where a player like Visa also plays strongly is also facilitating that interoperability. Because when you see a wallet player and that wallet is not speaking to the other wallet, even within the same market, talk less speaking to another wallet, probably from Nigeria to Kenya. But with a Visa credential issued by each one right now or acceptance enabled across board, we can then drive that local interoperability, cross-border interoperability, and also even connect Africa to global commerce such that an OPay wallet customer or a MoneyPoint wallet customer now with a Visa credential can actually travel across the world and there's no discrimination, they can use the payment. So I think it's going to be a lot of collaboration, bringing the best of what we have at the global scale and also working with the local players who are doing fantastic work, solving problems across local markets.
Awesome. Thank you for that. A collaborative approach. Honestly, I think in every single sector, it has shown that approach always works. Thank you for chipping that in. And I think right now, I just want to tilt a little to Platnova. Hi, Dr. Benjamin. Right now, Platnova sits at an intersection, right? Digital payments, remittance, international remittance. And we have heard from the first two speakers concerning some of the issues, right? Fragmentation, a lack of collaboration and whatnot. But from your point of view, what do you think structurally is the biggest bottleneck? It might not, maybe top two if you cannot zero it down to one.
Yeah, thank you for that question. That's an amazing question. For me, I think the biggest bottleneck is infrastructure fragmentation, right? I was going to chip that in while she was talking, but I knew that it was going to come to me regardless. So the reason why I see the infrastructure fragmentation is because if you look at the entire ecosystem today, you find that our technologies are built in fragmentations, right? They are disconnected to a large extent. And the goal that we are pursuing is to be able to move money across borders as easy as sending information. You see how easy it is to pass information from point A to point B. You know, that's the vision when it comes to moving money across borders. Now, the reason why infrastructure is one of our biggest issues in this space today is because some of our technologies are not connected, right? If we double down on collaborations, I think we should be able to resolve that whole fragmentation. That's the whole disorder. So for me, I would say this, right? Africans do not necessarily need more products or more builders. We need more collaboration, right? We need to integrate in such a way that our information from point A can pass to the, to the next person, and transactions are flowing easily. I heard one speaker here shared insight as to how other parts of the world are operating a single currency, and Africans up to date we have 54 countries, 54 regulations, jurisdictions, 64 currencies, and it's not necessarily making any sense. So for me, I think if we can consolidate all our infrastructure that we build over time, perform a seamless integration, I think that we can solve that biggest bottleneck, which is building infrastructures in bits as opposed to a consolidated infrastructure that can serve the entire African population. That's my answer to the question.
Thank you so much. Thank you. I don't really want seeing a pattern here. It's as if we all collectively agree on what the issue is. Like we ganged up on on the answers, and I love that. It just shows that we're all on the same page. We know what's going wrong, and that means a solution is within reach. Thank you so much, Dr. Benjamin. I'm going to come over to the ladies beside me. Hi, Ifeoluwa. Oxygen X, right? Oxygen X operates at the ecosystem level, right? Supporting innovation, talent, and venture building. We've spoken in detail about bottlenecks, about the problems we have, the fragmentation, the lack of collaboration. I want to know, what do you think is missing? Not in the bottleneck angle, but if you do say, okay, this is a great addition, do you think we are lacking in talent? Do you think it's capital funding? What do you think would be a let me not say magic ball, but something that if we drop, or if this is fixed today, or if this is added, you understand, to our ecosystem today, we will see a turnaround, from your opinion?
Okay. Good afternoon, everyone, and thanks for having me. Okay, so I think that it's a combination of everything. But from my perspective and from where we also sit, I would say that the major bottleneck is still around collaboration and, of course, an ecosystem play, which is missing. I say this because, I mean, Africa has seen an influx of capital over and over, and we do have a pool of talented people. However, if we do not come to that point where our regulators are speaking with one voice, where they are collaborating at a higher level, we'll still have financial institutions, startups, infrastructure managers still operating in silos. And the output of that will always be duplication of effort. For example, you would have different people building different solutions. You would also have fragmentation, like he had mentioned. And of course, you would have limited scalability, because at the end of the day, instead of all of us being able to push towards one goal, we're all trying to do it at different levels. And like they say, it's easier to get to a destination together than to go in different cars. So I'd say what is missing is still like an aligned framework that needs to be shared across different markets. We also need to have some level of standards. Once those standards are clear and it's been communicated effectively to all of the stakeholders, it's easy for everyone to work when they know what is required for them to work. If we know that this is the standard, this is the rule, this is the regulation, I'm sure everybody will align. And of course, we also need a lot of private-public collaboration, and it needs to happen at scale. That's one of the ways we can thrive. So for us at Oxygen X, I say it just starts to beg the question for us, and it helps us to see that it's not really just about funding and about building products. It's about then orchestrating these conversations and the connections at a global level, bringing all the players together, helping everyone to understand that we need to start to innovate. But while innovating, we also need to make sure that it is compounding and it's not fragmented. Because at the end of the day, it's not about the best solution. And I see a future where the ecosystem is what is leading the growth, not necessarily individual startups.
Thank you so much for chipping that in. Great. Yes, you can clap if you want to. That was a great answer. And I like how you spoke a bit about the influx that Africa has received in terms of funding in recent times. So I think that would be a perfect place for Aisha to kind of pick up from, because someone who is a wealth management specialist, I would say, from your experience, you have been able to see the key points, right? investors, HNIs, they need to have a certain level of confidence in what you are bringing to the table, right? They're not just, it's not like a situation where we just have money we want to spend, right? They need to be able to trust and trust in your innovation, in what you're building, and have confidence in you, your business perspective and whatnot. So I want to just know, from your experience, what do you think has been a key point of confidence in the African market, and what do you think can increase or grow such confidence in the hearts of investors and HNIs?
Okay, good afternoon, everyone. So in terms of HNIs, I don't even think it's necessarily a risk issue. I think it's more unpredictability and lack of consistency. And when I say lack of consistency, I'm talking lack of consistency across access, lack of consistency across regulation, and lack of consistency across currency. Because I feel like confidence is built once you have an idea of kind of where you're going. So just to break it down, when I say lack of access, lack of consistency across regulation, in one country, they'll tell you to bring your money in. In another country, it's difficult to take your money out. So then there'll be changes in regulations such as dollarization policies, FX restrictions. That just makes it very difficult for a HNI or an investor to plan. Then lack of consistency in currency. It's all well and good. So let's look back to 2024. It's all well and good earning 20% returns on your Naira, but then if you convert it back to USD, you've pretty much lost your returns. So due to devaluation. So there's that, which again kind of reduces confidence. And then I guess knowledge as well. So some people just don't know what is available to them as an individual investor. And that's a reason why I feel like a lot of HNIs still keep their funds abroad, not within Africa, just because they feel like there's more certainty in the Western markets than there is necessarily in Africa.
Okay, thank you so much for that. That's some great insight. I do have a follow-up question. To that, because we're sitting on a panel filled with people building in financial infrastructure, building solutions that solve one problem or multiple in all cases, right? You've touched on some of the key points, and I'd like to just follow that up with a second question, which is for the people here. Imagine you're speaking to us, right? Giving some sort of professional point of view or professional advice. What do you think, or how do you think the financial infrastructure, the digital financial infrastructure, can further deepen its hold or further support the growth of Africa? And this goes beyond just handling transactions, right? This is something we're talking more long term, right? Wealth creation. What steps do you think can be put in place or can be taken?
Okay, so I think we need to move from a payments conversation to a portfolios conversation. Payments are they're not straightforward, but you've made your payment and that's it. Whereas wealth creation is a bit more about, it's longer term, it's a bit more about your exit plan, it's a bit more about strategies around it. So I think there's a few things. So one, I feel like platforms need to embed investing. It's not good enough to just say, I've made a payment. How do I grow my money? How do I protect my money on the same platform, instead of having to use different platforms and different banks just to achieve one goal? Because I feel like wealth creation is about access, protection, and growth. If we're only talking about payments, it's a bit incomplete. Another thing is cross-border investments. I'm in Nigeria. I should be able to invest in Congo. I should be able to invest in Gambia. I should be able to invest in different parts of Africa at ease, which is still something that I don't think we've achieved. And then the other thing is liquidity. Moving $1,000 is a completely different conversation to moving $1 million, and HNIs are in that region. So I feel like platforms need to cater to those aspects specifically to be able to cater to the HNIs that are doing wealth management. It's past payments. we need to move into a portfolio conversation.
Thank you so much. Very clear. And I hope we're all picking a thing or two because I definitely am. So I'm just going to circle back to Emanuela. We've talked about HNIs and, funding and wealth creation, wealth management, right? I'd just like to know, because infrastructure is very capital intensive. Honestly, it goes beyond just having a dream and a vision. It is very, very capital intensive, and it is a long-term thing. No one is building to expect to multiply your profits in 2 days, right? Now, I want to know, what investment model do you recommend? Is it private, public, hybrid? Which one do you think can realistically, I'm not talking about dreams now or optimistic numbers, but realistically scale Africa's financial rails?
So I think realistically it has to be a hybrid model, right? Today, the government has put in regulations, they have the core systems, they have the rules that they have put in place to guide, infrastructure, and they have the infrastructure essentially, right? However, I think that where they are lacking is the pace at which they can deliver, right, and scale infrastructure growth for Nigerians, right? So where we see that happen is in funding and in execution for the government. On the private end, they have the limitations of maybe funding, especially when they are unable to see, or where the return on investment for that is unclear to them. But they have the speed, right? And they probably have the technical know-how as well to get things done. So I think that a hybrid collaboration between government institutions or the government sector and the private sector will work. And so what that would look like is the government sector, providing the platform, providing the infrastructure, while the private sector is layering or building on top of that, creating innovations, creating distribution networks, providing the service to the end users, right? So I think that is the level of collaboration that we need to scale infrastructure. But I think that also has to be done through key alignment. It requires key alignment, right? It requires openness, it requires transparency, right? It requires a shared, I think that both entities or both sectors will need to share in the risk as well, right? So when that is clear and private sectors also have the confidence that, if they invest, they are able to pull out or receive return on their investment, right? I think that infrastructure can scale.
Thank you so much for that. Very great insight there. So I'm just going to go over to Mr. Damola. Now, as at 20 years ago, 15 years ago, if we were talking payments and financial transactions, we know we're going to banks, right? But as at today, there is so much options, right? The blockchain, mobile money, right? Fintech springing up every single day. So the market, the ecosystem, the financial market is becoming very, very much decentralized. So I want to know what Visa is doing to remain relevant. How are you able to keep a strong footing in this industry?
All right, very important question. So for us, we welcome the level of innovation and the emergence of alternative rails that we're seeing in our markets. Maybe 10 years ago, we won't be speaking OPay, money points, and that also cuts across Africa, where you see mobile money players, and then emerging payment options are also, or probably more investment, but also evolving into payment with digital assets and crypto and everything that's coming up now. So for us as at Visa, we understand that even with these emerging payment options, there's still a problem that we've highlighted, which is interoperability, which is also the problem of trust, the problem of security, the problem of scalability, and then the problem of cross-border acceptance of all of this solution, and that's where we play. So for us, while we continue to advance innovative solutions that are driven by our heavy investment in research and development and innovation, we also play heavily in each market from a collaborative perspective, where we are not trying to duplicate what other players are already doing, but we're complementing and addressing some of the fundamental gaps that exist in some of those places. So becoming the connector where that blockchain solution, maybe a stablecoin based solution, is now accepted in a fiat on a fiat-based POS, or a wallet issuer in Nigeria can be accepted globally. That's still where we play. So we are playing in terms of driving innovation, but also ensuring that we can bring the global trusts and the global compliance and innovation that we have to complement what these emerging players are bringing to the market.
Thank you so much for that. Thank you so much for that. And I'm definitely picking some very key points from what you're saying. And I personally love what Visa is doing. Even at my company, we're looking to collaborate. It's always such a better thing to be open to such collaborations because we can easily scale. And I think that's the goal of the entire thing. It's not to have 1,000 solutions, it's to combine these solutions so the collective growth of Africa's industry, Africa's financial ecosystem as a whole. So thank you so much, Mr. Damola. I just want to speak to Ifeoluwa and ask, there's this particular question that I have at the moment, right? We've spoken about, even from your responses, I can see that collectively we all know what the problem is. We all know, at least, we know what the major problem is, and we know it means that if we do work together, this is a very much fixable thing. But I want to know, right, what kind of fintech ecosystem does Africa really need? Everyone is building, right? Everyone is innovating. Everyone has ideas. Great ideas, but which do you think will have the most positive impact to get us to where we're trying to get to? Do you understand? Do you think we need more startups or fewer, or more deeply integrated platforms that can operate at a, say, continental level?
I would say that at the end of the day, this conversation is still about collaboration. And we need to be able to bring all the players together. When all the players are speaking the same language, for example, we've been hearing interoperability, right? It's not just something that has to be said, it's something that has to be lived. It has to be added to the fabric of how we operate. Startups need to start to see themselves as part of the bigger financial group, not just as a standalone. They have to be able to embed standards into the way we operate as a business, for example, yeah? And then we have to look at it and say that if we want to scale, we have to be digitally inclined. And to be digitally inclined, you have to ask yourself, what are the players doing? Should I be building a solution by myself, or should I be collaborating with somebody? Has somebody done this before? And we have just acknowledged the big players in the industry have done a lot of this work. Why does somebody need to start it all over again? Why don't you just identify someone that is doing it in the market and then just tap into it and then just leverage exactly? But we have situations where a lot of people are, doing things in silos. We want to then get to that point where we're leveraging our shared infrastructure, looking at the system that exists today, and then trying to build on it, trying to layer on it instead of building in silos. Because at the end of the day, we don't want to just have individual good platforms. We want to have a proper, and it starts with having a proper connected platform or an ecosystem where everybody can tap into it and then, participate actively.
Oh, I love that. I love that so much. So it's not always about building new things. It's about the things we have built. How can we make them work together to achieve this goal? Now, I'm just going to go over to Platnova once more. Mr. Benjamin, there's a lot in terms of diversity when it comes to currencies at the moment. Look at cryptocurrencies, for example. So stable coins, there's a lot of alternative rails to move money as we speak.
Yes.
These, I'm not even going to ask if these have caused the disruption. They definitely have. Now, I want to know from your point of view, what kind of disruption would you say this is? Is this like something positive that has contributed positively to the ecosystem, or is this something that has moved too quickly and now you're unsure?
No, I think it's my answer to that would be it's very positive, right? I think it's also transformative. I think the idea of introducing stable coins to our ecosystem has sort of like made a lot of things easier. You know, before the traditional banking system makes life unbearable for the average user, if you know what I mean. But with stable coins today, if you introduce stable coins into your infrastructure, right, you can settle faster, your fees are lower, right, and you know you can move money, you know, globally across the world. So for me, I think that the introduction of stable coins into the ecosystem is more of a positive impact and transformative. And I see the future as, I see the future as hybrid. It's a hybrid model where, you know, the stable coin introduction is not replacing, you know, our existing infrastructure. No, they're collaborating, like I said. So if you look at the ecosystem, right, and you remove the idea of competition, or you remove the idea of, oh, this is a threat, as opposed to how can we work together, I think we would grow as an ecosystem, right? So I see stablecoins as supporting our traditional finance system. So I'll give an example, classic scenario. You receive a local payment in Kenya, for instance. You want to move that money to Canada. Tell me, how do you think, or what means do you think would be the fastest way to teleport that money to Canada? It's simple. Get a local provider in Kenya that will take your local Kenya shillings, give you stables, take that stables can move at the speed of light to Canada, get a local provider in Canada can settle you Canadian dollars, and you are good to go. Now, imagine what it would take you as a Kenyan living in Kenya to move money, you know, using the normal 3 to 5 days SWIFT network, or, you know, trying to first, you know, change from a BDC in Kenya, then deposit it to your bank. It has to be ridiculous, you know what I mean? So, stablecoin has come to solve that problem, right? So for me, I think it's a collaboration game, right? So they're coming to transform the entire ecosystem, and I think they work side by side. So yeah, so the future is hybrid. Thank you.
The future is hybrid. I love that so much. I'm going to write that down. We've spoken a lot about Africa and the ecosystem and fragmentation, collaboration. We've gone on a lot about that. But Aisha, the question I do have for you right now is talking about the individual, the regular people, the people seated here today, right? Our ecosystem is not built by HNIs alone. These people are the backbone as well, right? And I want to know, for individuals, for regular people looking to grow their wealth, what do you think they should consider when choosing the right platforms to do this, to manage and potentially grow their wealth? What do you think they should look out for?
Okay, so it's important to note that we've gone from a place where we had limited access to actually too much access. And that's great, but it means that it's now harder to make decisions. So instead of making a decision based on hype or aesthetic or convenience, it needs to be more about structure. So there's a few questions that you need to ask. So one is like safety. So the platform that you're choosing, is it regulated? Are your funds safe? If anything happens, like, who do you call? That's first. Second, liquidity. It's all well and good growing your money and seeing your returns, but if you can't take the money out, then it's worthless. And then thirdly, understanding. Do you actually understand what you're investing in? People see returns and just ignore the risk associated with it. You don't know that you could be investing in something that has returns, but then your capital is at risk. So if you don't understand it, either research or don't invest in it. So I think those are the three main things to look out for: safety, understanding of what you're investing, and liquidity of your funds.
Thank you so much. And that is for everyone seated here. I think at this point we can take a few questions. So if there are any questions in the crowd, maybe one question, we can take that really quickly. Okay, I see a young lady. Please let us know what your question is and we'll provide answers.
Hello, everyone. My name is Adebimpe Adeni. I am the lead consultant at BB Helps Consult, and we are a student recruitment firm. My question is directed to the platform Nova's CEO. So what I like to ask is, the future is hybrid. I have seen partnerships between schools and payment platforms, and I know that as I wouldn't want to use this, but permit me to say that. I don't want to say it's a local African digital economy, but I think, is it possible to have extensions outside Nigeria and Africa as a whole when you spoke about cable connections and all that? Because when I see the prices that my students are charged when they want to pay their school fee, it's $132, 200 euros just for the percentage commission the payment link collects. It's actually a lot. So I think maybe you could refine that. And some would like to pay their school fee with shitcoins and bitcoins. And that's what they do not have yet. So I think if you could have a digital, should I? Oh, thank you. So is it possible to do something like that, or is there something you can actually talk about? Because there are other firms and technological companies that would like to address that. Thank you.
Yes, thank you for that question. That's a very amazing question. And I can tell you for a fact that, challenges like that is one of the reasons why we started Platnova in the first place. And we see Platnova sits at the intersection between users like yourself, businesses, and infrastructure. So we tried as much as possible to capture all three. So we build the infrastructure, right, to sort of like handle all of that. So if you're already an existing fintech, you can integrate our APIs, and we can give you access to amazing solutions. We also have like a business platform and a personal platform that you can do all of that. So if you today on the Platnova app, you can bring in your stables, you can bring in your shitcoins, you can bring in your Bitcoin. We have over 500 plus, crypto assets that we support, right? You can fund your dollar wallet and you can pay your school fees easily. We're integrated to all the financial institutions across the globe. So with Platnova, instead of filling for me or going to your BDCs to go and send money, you can pay your school fees directly from our app, right? So you can do that easily. So if you have mobile money today, you can fund your wallet with mobile money. If you have crypto, you can fund your wallet with crypto and you can just pay your school fees easily. And guess what? We do not charge you for paying your school fees. It's free. So you don't even have to pay all of that. And even if you don't want to use our app and you have another financial institution that you love, you can encourage them to integrate our APIs, because we have the infrastructure to also support them to do all of these things at scales. And our infrastructure is strictly powered by stables. So what that means is that you have faster settlement times. You can be rest assured that it is safe, and you can also be rest assured that we can do insane limits too as well. So we are covering the business market, we are covering the merchant market, and also covering the individual market. So I believe this answers your questions. Thank you.
All right. A round of applause for our panelists. A round of applause for our panelists. Please make that better for our panelists. One last time. One last time. One last time. Thank you. Thank you to our amazing panelists. You've done justice to the subject matter. Can you please just come forward a bit for the photo op? And can we have the editor, BusinessDay Media Limited, Mr. Lolade Akinmurele, come on stage to join this photo op? Okay. All right. Good shots. Good shots. Smile. Say cheese. If it was the art of saying cheese. All right, ladies and gentlemen, a round of applause for our panelists one last time. Mr. Lordy, please remain on stage. Just like we said earlier, a round of applause for our panelists now. We brought experts, Platnova, Visa, Team Apt, Roku. A round of applause for them one last time, please. Thank you. It's not easy to stay on this stage. Cameras on you, eyes on you for about 20, 30 minutes, just dispensing knowledge. Mr. Wade, are you ready for us, sir? We said, yes. For every good thing that has begun must have an end. So, ladies and gentlemen, please put your hands together for my editor at BusinessDay Media, Mr. Lolade, as he delivers the closing remarks.
Thank you. Thank you so much. I think my task here is very straightforward. You guys, everyone has been here since 9 a.m. or 10 a.m. Listening to very vibrant conversations about the fintech industry and the possibilities. We all agree that the industry has really been a trailblazer in terms of innovation, but there's even still so much to be done, right? So I'll go straight to the point. Like I said, the task here for me is very simple and straightforward. Is to thank you all for coming. Is to say a big thank you also to our panelists. I think they did very good service to the task before them this morning. And of course, to say a big thank you to our sponsors as well. It's because of their partnership that we were able to put this together today. I'll just call out the names of the sponsors. We've got OPay, Visa, Team Apt, Oxygen, Platnova, FCMB, and Olanimu Ajayi. Thank you so much. And on that note, I say thank you so much for coming. We look forward to seeing you next year at the next edition, and safe journeys to your various destinations. Thank you.
Ladies and gentlemen, that will be all for the BusinessDay Fintech Summit 2026. It's been a great time. We've had an amazing time having engaging discussions, enlightening conversations. Today has been all about keynote addresses, keynote speeches, industry presentations, and we hope that next year, BusinessDay Fintech Summit 2027, will have this event much more bigger, larger, and better. Thank you so much. The next financial frontier is not ahead of us, it's already here. Good night.